administrative help to organize this conference. The format will be, I think everybody in the audience has available the schedule for the conference. And so there'll be 3 days with a morning session and an afternoon session in each day. Each paper will be allocated 45 minutes, which the first half hour will be a presentation of the paper by the author, and then the next 15 minutes will be discussion, questions among the panelists, among the presenters about the paper. And then there'll be a 15-minute break before the next paper starts. In the midday East Coast US time, there'll be a half-hour break from 12:45 to 1:15 p.m. And I'm proposing to open up the first half of that break to questions from the general audience that can be posed using the Q&A function on your, is that right, Colin, the Q&A function?
Yeah, the Q&A or the chat both work fine.
Okay. So let me, without further ado, introduce Giacomo Corneo, who's a professor of economics at the Free University of Berlin, who's going to talk on a progressive sovereign wealth fund. So I think you should have the ability now to share your screen.
I'll try.
Giacomo. And I will notify people, say 5 minutes before the 35 minutes is up.
Can you see this? Can you see the slides?
Not yet.
Not yet. Okay. Okay, then. So, and now?
Not yet.
Okay.
We don't see your desktop.
Okay. So is it now visible?
No. Have you found the share screen icon?
So this is not visible now?
No.
Okay. So then let me try again.
Okay, now we see your desktop.
Okay. Now?
Good,
Yes.
perfect.
Oh, great. Okay. So first of all, I would like to warmly thank John for being so so strong in these difficult times and to have managed to organize this conference with 1 year of delay. But so maybe now we are even more able to discuss this very important topic. So thank you again a lot, John, for giving me and us this opportunity. So today, the economic rationale of socialism has become more compelling because of two twin developments: the decline of the labor share and the inability of the social democratic model to preserve social cohesion, let alone to attain novel emancipatory goals. The decline of the labor share and the limited scope of redistribution through the tax system suggest that the distribution of primary incomes from capital should be made more equal. And this is possible if public ownership of capital becomes an additional pillar of our economic system, because the corresponding capital returns can then be equally distributed to the population via a social dividend. Crucially, public ownership of capital must be embodied in concrete, suitable institutions. The right one for a beginning is, I think, a progressive sovereign wealth fund. A progressive sovereign wealth fund would transform into vehicles of social progress two institutions of modern day capitalism, namely the stock market and the independent public agency, because the sovereign wealth fund I am proposing would be such a democratically legitimate but politically independent public agency. And from that perspective, such an institution could be viewed as a plausible step in the dialectics of historical development. Maybe one step leading eventually to the introduction of a promising variant of market socialism, namely shareholder socialism. The progressive sovereign wealth fund that I am going to deal with would be an ethical investor in risky assets, mainly in the worldwide stock market. It would invest without assuming control of business enterprises, and whose net returns would be earmarked to finance a social dividend. In this way, every citizen would benefit from the productivity gains entailed by globalization and automation. And being tied to capital incomes that are predicted to grow more rapidly than labor incomes, such a social dividend would durably reduce income inequality. The size of this impact would clearly depend on the size of the social dividend and hence of the size of the sovereign wealth fund. So model computations that I'm going to present suggest that an optimal size of such an institution would be close to 1/2 of GDP. If one assumes a yearly rate of return from investment in the stock market of about 6%, this would create a budget for the social dividend of about 3 GDP points. For a country like Germany, this would translate into a social dividend of about 1,500 euros per year, far from a basic income, but enough to reduce the poverty rate by about 1/3. How could the polity endow such an institution with capital? There are various possibilities. I think that for many countries, the two more interesting ones would be public debt and the inheritance tax. So for Germany, I've proposed to finance this institution by 3/4 by means of emission of long-term inflation-indexed government bonds, and the rest by earmarking for a number of years the revenues from the inheritance tax. I have developed this blueprint with Germany and the countries of the Eurozone in mind. However, I am aware of a related blueprint by Matt Bruning for the United States. The intellectual antecedents of this approach can be traced back to works by Gossen and Valra in the 19th century, and James Mead and Tony Atkinson in the last century. The idea being that the government enjoys a comparative advantage as a creditor, and it could use this advantage by borrowing at very low cost, acquiring commercial assets that are not challenging from the viewpoint of management, and then use the net returns from this operation in order to improve the efficiency equity trade-off. So let me illustrate the economic logic behind this proposal in a highly stylized model that builds upon Diamond and Giacomo's work. The model features a stochastic, stationary, infinitely lived closed economy inhabited by overlapping generations, each living 2 periods. In the first period, individuals inelastically supply 1 unit of labor and they consume in both periods. The distinctive trait of this model is to assume that each generation consists of 2 types of agents: neoclassical optimizers and hand-to-mouth workers covered by Social Security. The assumption that a portion of the population consists of hand-to-mouth workers is an attempt to capture in a stylized way the empirical finding that even in economies with highly developed financial markets, the bulk of the population is financially passive. This is what behavioral finance calls the participation puzzle. That is the finding that a large share of the household population, for instance, 80% in Germany, owns no stocks or other risky assets despite their high mean return, and that this lack of participation especially hits households with low income and low education. There is a kind of insider-outsider divide with respect to the access to markets with high returns and also risky returns. So I assume, following Diamond and Giacomo, that workers covered by Social Security are entirely passive. That is to say, they consume whatever disposable income they have in each period. Both workers and the neoclassical self-employed savers are assumed to be risk averse. There is one perishable good that can be either consumed or invested. If it is invested, it yields some output 1 period ahead. And there are 2 types of investment possibilities. You may either invest in firms that use a technology that produces safe output next period, or firms that use a technology that produces stochastic output 1 period ahead. Both technologies are assumed to be linear. And the first type of firms finance themselves by means of obligations that can credibly promise safe returns to their investors, whereas the second type of firms finance themselves on the stock market. In the status quo, there is going to be a stationary equilibrium in which there is no public ownership of capital, and in which the young savers find it optimal to invest strictly positive amounts, both in the safe asset and in the risky asset. So the question that is examined in the paper is, what are the effects from conducting, starting from such a status quo, a policy experiment by which a permanent debt-financed small sovereign wealth fund is established that in every period borrows from the young savers, invests the proceeds in the stock markets, and uses the net returns, that is to say, the gross returns minus the financing cost, in order to finance a social dividend, that is to say, a lump sum transfer, uniform for every individual that is alive in that period. So the main result of the first part of the paper is to show that creating such a progressive sovereign wealth fund increases the expected utility of all individuals. That is to say, creating such an institution of public ownership of capital would not sacrifice efficiency for equality, but would promote both. The economic intuition for this result with respect to the worker population is closely related to the participation puzzle. In the status quo today, now, workers do not efficiently share in the risk of the economy. And what the sovereign wealth fund does is to make them indirectly, collectively participate in such a risk sharing. And this brings their level of risk taking closer to the optimal one. This is the source of the efficiency gain. You may relate the rationale for such an institution to the rationale that we are used to put forward when we think about social security. Social security was established in order to remedy the inadequacy of retirement saving by many workers. It was a success by eradicating old age poverty and reducing the burden of risk about a time in life when one is old and unable to work. Now, workers who do not properly save are unlikely to properly allocate their wealth in a well-diversified portfolio that carries a proper amount of risk. And just as mandatory saving can increase the lifetime utility of those workers, so can an institution like the Progressive Sovereign Wealth Fund that forces them to collectively bear some financial risk. The intuition for the positive welfare effect on the savers relates to the fact that also they cannot efficiently share risk in the first period of their life, because that would have required them to enter financial trades before they were born. So something which is impossible for a finitely lived individual becomes possible for a long-lived institution like the Progressive Sovereign Wealth Fund. So this result is extremely robust, and in the paper I show that it carries over to more general settings in which individuals live more than 2 periods, labor supplies is endogenous, labor incomes may be uncertain, there can be some pre-existing public debt, an endogenous interest rate, endogenous stock returns, there may be land and other long-lived assets. We may come back to these extensions in the discussion. Once we have clarified the potential for a welfare increase by means of introducing some public ownership of capital, the next question is about the optimal size of public wealth, because if the optimal size is small, then we would expect also that its effects are small. So as a first step, in order to answer this question, I've offered an analysis of the model under some assumptions. I assume that the social planner is Rawlsian and tries to maximize the expected lifetime utility of workers who may live any number of years. Since this is a stationary model, the expected lifetime utility of workers will be the same for every generation of workers. Moreover, I assume that the social security scheme is designed so as to stabilize the disposable income of workers over the entire life cycle, both during the active phase through the labor market and during the pension retirement phase. Then I specialize the model by assuming that workers have constant relative risk aversion utilities, and by assuming that the return of the risky asset is log normally distributed. Under these assumptions, one can derive a closed form solution for the planner's problem by making use of standard techniques of portfolio theory and inserting in this formula numbers taken from the empirical literature. One finds that the optimal size of such a progressive sovereign wealth fund is in a range somewhere between 30 and 60% of GDP. As I said before, if we take 50% for a country like Germany, this would create a social dividend of roughly 1,500 euros. Of course, stock markets are volatile, so that we could not expect such a net return to be achieved every year. However, if we have at least a small open economy, the government could use the international financial market in order to smooth the payouts to the citizens over time. It could, in times of supernormal returns, refrain from distributing all returns, keeping some financial reserve, and use that reserve in times of subnormal returns in order to have a stable social dividend over time. This is roughly what the Alaskan sovereign wealth fund is already doing. This is the only existing sovereign wealth fund in the world that pays out a social dividend. There are three additional ways in which this institution could foster the socialist goals of personal autonomy and democratic participation. First, it could allow every citizen to enjoy at regular times a sabbatical year. This would work like this. Upon reaching adulthood, every citizen could choose to open a sabbatical account at the sovereign wealth fund. This would entail that the social dividend is locked in this personal account for a number of years, for instance, 7 years. And during this time, it accumulates at the high rates of return obtained by the sovereign wealth fund. And at the end of this period, the resulting amount would be given to the citizen and could be used to finance a sabbatical year. That is to say, a period of several months or a year, during which the citizen may volunteer in the social economy, engage in politics, pursue lifelong learning, all activities that would not only enhance personal autonomy, but also generate far-reaching positive externalities in society. Second, after a later age, say age 40, citizens may get the option to open an old age account instead of a sabbatical account. Here, the lock-in period of the individual's social dividend would be longer, say 25 to 30 years. Accumulation would occur under the same rules as for the sabbatical account, but at the end of the lock-in period, the resulting capital would be transformed into an annuity, so that in old age, the citizen would receive both the regular social dividend and this annuity, which in combination would drastically reduce the risk of old age poverty. Finally, I think that such an institution should be a faithful expression of the aspirations of the citizens. And these are characterized by deep concerns about the provision of fundamental global public goods like peace, human rights, environmental sustainability. And therefore, I would suggest that the investment decisions of such an institution be subject to ethical guidelines. The Norwegian Sovereign Wealth Fund offers us an example of how this could be done, because they experienced such an ethical investment over many years in a successful way. One could conceive of a broad societal debate leading to the formulation in Parliament of an ethical code that describes actions by companies that are deemed to be unacceptable by the polity. For instance, the production of nuclear weapons, the violation of human rights, the serious damaging of the natural environment. And then a council of ethics would monitor the companies in which the Sovereign Wealth Fund has invested and prompt their exclusion from the universe of investable funds in case of violation. This would not only be a way to express our collective identity, but it would also foster debate on what we share, not what divides us. And it would also be an effective means of pressure on multinationals, because if such a fund is a prominent investor owning, say, 3 to 5% of all shares of a company, then the sudden sale of that capital would drastically reduce the market value of companies. And since CEOs are remunerated to a large extent by means of stock options, they would have a pecuniary incentive to care about such important things like peace, human rights, and environmental sustainability. As I mentioned, yes.
5 minutes.
Okay. As I mentioned at the beginning, I see this institution as a promising first step in order for the polity to learn to manage public capital. I think it's promising because we have already experienced from other sovereign wealth funds from which we can learn. If this experience is successful, I think this would be a nice way to build trust in the polity that more can be tried. That is to say, as a second step, the polity may want to activate its public ownership by challenging capitalistic dominance in some selected domestic firms. One could imagine transferring some share of the capital endowment of this institution to a second one, a federal shareholder, whose mission would be to replace capitalist control by public democratic control, which would mean empowering workers in those firms and by establishing suitable co-determination institutions and by assigning civil society organizations the role of watchdog within those firms in order to make sure that all those wonderful rules that we have to protect the workers, the consumers, the natural environment are indeed effective in everyday experience. So let me close by contrasting this approach with a competing one, the one of popular capitalism. So you may react to the decline of the labor share in a different way. You may try to make every worker a small capitalist. That is to say, instead of having, like in my proposal, the workers collectively own, say, the robots, you may conceive of an economy in which every worker owns a robot. This is the idea of popular capitalism that was propagated by Margaret Thatcher, for example, and it is closely related to the idea of property owning democracy that is more popular in liberal circles, and it is why I think this topic is interesting for this audience. So popular capitalism grounds on a distinctive Weltanschauung, one that views individual choices in markets, especially in financial markets, as the centerpiece of human freedom, and one that views individual economic responsibility as the touchstone of virtue. I think that this is a highly one-sided assessment that should be criticized by two angles. For one thing, freedom presupposes that you are the master of your own lifetime. But popular capitalism would rob people of a lot of their lifetime. Popular capitalism would lead adults to run after the stock market in order to manage their wealth, and would have to prepare people to become such small capitalists by introducing a mass financial education and by encouraging them to save in order to have the wealth they have to manage. I think that the time and energy of individuals should be channeled in more reasonable activities. Secondly, virtue for capitalists is to prevail in the capitalist game by beating the other capitalists in terms of relative wealth. And this is accompanied by corresponding values and mentality, something that you can appreciate by watching a good movie about Wall Street. Now, I think that this is not desirable. I think that the economic system should rather promote values that de-emphasize material possessions and human relations based on power. So since one picture says more than 1,000 words, let me show you how in Germany, the highly influential Bertelsmann Stiftung advertises the future of popular capitalism for Germany. For families raising their small kids in adoration of the chart depicting the price of securities. So is this what we want? Summarizing, I think that the social democratic model has exhausted its propulsive force and is unlikely to be able to reverse the trend of increasing income concentration. However, a novel institution that manages public capital will do, namely an ethical sovereign wealth fund that invests in the world stock market and finances a social dividend. I think that establishing such an institution would launch a new progressive era, an era of reduced inequality, better provision of fundamental global public goods, and an era of rejuvenation of democracy. Thank you very much.
Thank you, Giacomo, for sticking to the time and for an admirably clear presentation. So I'm going to open it up now to a discussion or among the panelists for about 10 minutes.
Should I eliminate the presentation now, or?
I think that's a good idea, yeah.
Okay. Is that the way now?
That is gone. That's good.
Yeah.
So do we have any questions from the panelists? I don't see raised hands.
I see two raised hands by Francois and Marc.
Oh, okay, good. I didn't. Oh, there they are. Very good. Thank you. I'm sorry, I'm not using the. Okay, Francois, go ahead.
Yes, thank you, Giacomo. It's a clarification question. So I think you said that the sovereign fund will be composed of debt. And so given that the workers do not save, I was wondering whom would the government borrow from? I guess it will be the entrepreneurs, but I don't see the incentives of the entrepreneurs to I mean, to play this game. So can you clarify the question of the funding of the sovereign fund?
Yes. Well, there are two perspectives. One is the perspective of the formal model, and one is the perspective of concrete policy. In the formal model, the public debt is acquired, is purchased by young savers. So there is some share of the population that is formed by neoclassical agents that save, and in the status quo, they invest both in safe assets, obligations, and stocks. So, and they will optimally buy public debt that is equivalent, at least equivalent, to obligations in terms of safety. So, and this makes sure that the public debt will find agents who purchase it. So in practice, of course, the question depends a lot on the scale of the operation. So if we think of, for instance, the Eurozone or Germany doing this operation, then I think that quite a large share of the public debt that would be emitted would be acquired by foreign savers. So as you know, since the early 80s, there has been a declining trend on the real interest rate on safe assets. So that is to say that there is a huge global demand for safe assets, and it is quite realistic to assume that it would not be difficult to find at a global level enough demand for assets that would be emitted, say, by the Eurozone or by Germany or by any other country with a AAA or a high reputation in the financial market.
Marc, Fleurbaey?
Yes, so thank you, Giacomo. This is really very, very convincing and appealing. I was wondering about the political prospects for this, and I was thinking of the development of the role of pension funds in holding a large chunk of capital now. And so could we consider that what's happening with pension funds that have played, for instance, a leading role in pushing Exxon to change its policy and so on. And I really like your introducing the idea of socially responsible investment in the picture. So it's not just about the risk pooling and this sort of thing, but also about the orientation of investment. So what about pension funds as being perhaps a sort of a transition vehicle for this idea? Is it crazy, or what do you think of that?
Well, I think this will be highly country dependent, because in some countries, this is a highly developed institution, whereas in others, like for instance in Germany, it is not something that already exists. So in one way, there is a fundamental difference in the sense that what I propose is something which, so to speak, collectively creates this sovereign wealth fund without individual, possibly differentiated efforts in order to build personal accounts or retirement accounts and so on. So the philosophy is similar but different. So the idea is to exploit the fact that so governments, at least in states that are not failed states, are the result of an historical development, and by their own persistence in history, they have a stability that allows them to borrow at the international level at very low interest rates. This is a kind of a public good, if you wish. And the idea is to share these public goods in this ethically motivated way. So in a way that is to care about global public goods, to care about inequality, and to encourage democratic participation. Because as I said before, I think that establishing the ethical requirements of investment for the sovereign wealth funds would be a broad democratic process that would not end just with a parliamentary decision. I imagine that there will be a continuous coming up of questions, say child labor, say what about firms that produce drones, military drones? So there are a lot of issues that would come up, and then we would face the decision, the trade-off, because of course at the margin, the smaller becomes the universe of investable funds, the stricter are our ethical guidelines. Well, on average, then the smaller will be the social dividend. So this will also force the electorate, the citizens, to be honest about trade-offs. And I think we are so rich that we will go a lot in a lot of that way in order to take care of global public goods.
If I may follow up with a small suggestion on funding, I just heard a talk in monetary policy about quantitative easing and what they call helicopter money. So money creation, not just public debt, but pure money creation could be a way to fund it.
Yes, yes. Well, this is so a hot topic, but yes, thank you.
Moene.
Yeah.
Oh, sorry. Go ahead, Giacomo.
No, I wanted to tell you that Karl is also raising his hand.
Yes, Karl. Unmute.
We cannot hear you.
There.
Again,
Yes.
I really liked the presentation. I have two suggestions or two small remarks, and one is to look into this wage earner fund in Sweden. There was a plan of that it started in the planning. I think it started in the 60s and it continued in the 70s. And it became a political catastrophe, actually. So there was the first time in Sweden that the bourgeoisie political parties sort of united against the Social Democrats that were in favor of the wage earner fund. It was sometimes it's called the Meidner fund. It is the same Meidner union economist in Sweden that in Rehn and Meidner, if you know about that couple of economists. But I think it's interesting to see, it's not exactly what it's far from exactly what you suggest, but I think it's interesting to look into why did it fail, what was wrong with it, but it really united the right-wingers in Sweden for the first time after 1930s. That was the one thing. The second thing is as you know, Norway has a huge sovereign wealth fund, and so the Norwegian wealth fund, oil fund we call it, they only invest abroad, and there's sort of some strict regulations. They also have an ethical board, and rather strict, I think, in sort of whether they can invest in that and that activity. And there's a huge discussion in Norway over the investment. The way it's not the social dividend directly, but it is more in the traditional social democracy that you pay it out in funding the welfare state. But it works a little bit somewhat in your direction. And again, it could be interesting to sort of to look through all these kind of constructions. It's very different from Alaska, but it is there is a variation of this, and that means that there are many models to choose from. Okay, but I like it, what you said.
Yeah, so thank you very much. Indeed, the Meidner plan, in a way, it's an antecedent, but it is also very different. So for one thing, as I suggested at the beginning, the progressive sovereign wealth fund should just be a way to become a kind of collective rentier without achieving control of companies. And only the second stage would be then to challenge capitalists. Whereas in the Meidner plan, it was so conceived that indeed the wage earner funds would have, after a number of years, the majority of the capital of firms, and therefore also have their control. I think that a major difficulty of this approach was also that it was ill-conceived from the viewpoint of incentives, because firms had to distribute a part of their profits to the wage earner funds, so that the most profitable firms, that is to say, on average, the firms that were managed in the best way, would change their management and their governance. So this would be a rather inefficient way to proceed. I think that if we think about the second institutions that I've proposed, it would be better to actually take control of companies that are mismanaged, because these are the companies where you can raise value in the first place. Indeed, the progressive sovereign wealth fund that I propose would have also, similarly to the Norwegian sovereign wealth fund, a very low cap on domestic investment in order to avoid these issues and the issues of lobbying by means of strong national firms and banks that could try to interfere with the progressive sovereign wealth fund. So I'm aware of those risks, and I think that there are ways to minimize them. And finally, let me mention that the difference with respect to just letting the net returns of the sovereign wealth fund feed the public budget, so like in Sweden, Norway, to finance the welfare state. I think the major difference is a symbolic political difference, in the sense that the social dividend would have a strong political saliency. It would stand for the unity of the citizenry, and it would make it also quite difficult for opportunistic governments to sell the assets of the sovereign wealth fund if they want to finance their extravagant fiscal policy or pork barrels and so on. Because every voter would have a stake in this institution because of the social dividend, and this would increase the saliency of attempts of, say, a Berlusconi government to sell out such a fund. So I think that for those two symbolic and political economy reasons, it is a good idea for, maybe not for Norway, but for many countries like Germany or many countries of the Eurozone to have a social dividend.
I have one question from the general audience, from Antoine Germain, and I'll read it to you. Don't you think that the amount of social dividends accumulated for years on a locked-in account, when liberated, will only serve to repay the principal and interest of an individual's debt that she would have contracted in order to smooth her consumption over all those years? If so, it would not solve the issue of poverty after retirement.
Okay, well, this so this assumes, of course, rather Machiavellic workers that are not what we find in behavioral finance. And then I do not understand the logic of such a way of proceeding, because people would opt to open such an old age account. So since they are not forced to do this, so it would be quite clumsy to do this. It could be, but I think that for the groups in the population for which we really are afraid of the risk of old age poverty, that for that group it would rather be a rather automatic way in order to ensure the fact that they can easily provide for old age. So
Thank you very much, Giacomo. I don't see any other questions. Suresh, sorry.
Yeah, no problem. So I was wondering if actually we could take it, particularly in, so say, the more financialized countries, if you kind of believe that there's going to be a bunch that essentially, so I have two questions. One is, if you believe that kind of financial markets are kind of naturally going to generate a leverage problem and they're going to run into crisis, you might be able to get the assets at a discount by just kind of waiting for there to be another financial crisis created by leverage. and just use the same tools that the central bank used to bail them out to like basically put the assets on the government balance sheet. So that's just like maybe a cheapo way of getting the sovereign wealth fund. Sort of my second question was kind of more about the underlying assumption here is still that the stock market is pretty good at figuring out the optimal investments for society. And I just want to sort of flag that as like perhaps less true as an economy becomes more dependent on ideas and innovation and patents and things, as the flow of profits into companies, that basically the underlying assumption that we can sort of reliably take the stock market prices as social optimal signals of where to park society's resources, we might want to flag that.
Yeah. Okay. Thanks a lot for those questions. Indeed, there are many ways to achieve the way in which the government and the sovereign wealth fund may enter the stock market. Just yesterday, I read that the German government that saved Lufthansa with so by buying shares of Lufthansa 1 year ago for 300 million euros. Now the same shares are worth 1.2 billion. So. So in 1 year, 400% capital gain. So there are indeed examples where the government can profit from the stock market. So with respect to the ability of sovereign wealth funds to choose how to invest, I think that we are in a realm of portfolio decisions that are quite manageable. So I may mention 2 examples of success in which I would not have expected any success. One is the island of Kiribati, which is I think in Micronesia, and they grounded a sovereign wealth fund in the 50s because their exports of guano were disappearing, and they have been able, the Kiribatians, so these are not very well-educated populations, to have a sovereign wealth fund till today that has a value of about, that provides Kiribatians with some 30% of national income. And the other example is Bavaria, an extremely conservative land in Germany, and they in Bavaria have asked the Bundesbank to manage the wealth for the pensions of civil servants of Bavaria a few years ago, and they have to follow quite strict rules. Less than 50% of the wealth can be invested in risky markets, but still, on average, over the last, I think, 15 years, they have obtained a yearly rate of return of 6.5%. So, and I know that German Bundesbank employees are not so sophisticated in this realm. So I think this is
no, I'm not contesting that you can get a significant rate of return by investing in the stock market. I'm just going to suggest that if a chunk of that is coming from Facebook's IP and Facebook is just getting that flow, it's like it's not clear that that's the socially efficient use of that investment. So I don't disagree that you can get a high rate of return. It's the underlying source of that rate of return.
Yeah. I have only envisaged the possibility to cure for the negative externalities that may be linked to the under-provision of the public goods in a way that is linked to the ethical guidelines that would cure for those negative externalities of companies. Yeah.
Thank you very much. I think we have to reconvene in 5 minutes, 11 o'clock here, 1700 in continental Europe. And so let's take that break now. I see you have a hand up, Hélène, but I really want to take a short break to try to stick on the
I'll
schedule.
put it in the chat. Thanks.
Okay, yeah, we'll reconvene in 5 minutes. Thank you. So this is Karl Moene from University of Oslo, speaking on whether social democracy has a future.
Yeah, so I'm going to be more broad brushed than the previous presentation. There is a paper that I handed in. It's not complete, very late. I'm sorry for that. And I will, like the others, thank John for organizing this and also for being patient with me in particular. So what I'm going to talk about is a fear that I have that the sort of social democratic area in Scandinavia, where social democracy used to be very strong, may be over. But I'm not hoping that that is true, but there are some signs that it might be the case. And I'm going to sort of just try out some simple explanations why I think it is the case. And doing that, I'm just going to remind you what were the sort of characteristic features of social democracy when it worked. I understand that everything I know about this, I can't present in 30 minutes. So they're going to be just some of the thoughts, and there are more details in the paper that I will complete, and there's already some stuff there. So as you know, the achievement of social democracy in Scandinavia, in particular in Sweden and Norway, the history of Sweden and Norway is extremely parallel. It's almost parallel in Denmark, but then the biggest union in Denmark didn't want to cooperate to the same extent as with other unions as the unions did in Sweden and Norway. So if there are some differences between Denmark on the one hand and Sweden and Norway on the other, it's more like something that happened in the 30s. But I would speak as if they have sort of common history. And when it comes to Norway and Sweden, that is really the case. So since the 30s, I will come back to this, what happened, but since the 30s and up to, I would say, 1980s, there have been a tremendous equalization of wages in Scandinavian countries, extremely low wage inequality. It's combined at the same time with a huge expansion of the welfare state, like in most other European countries, but with more generosity, I think, in Sweden and Norway and Denmark, if you compare these indexes of generosity across countries. It's also very typical, and that this is more for Americans than for Europeans, that I think egalitarianism in Europe, that's very much connected to protection without protectionism. So these have been free trade, open economies, in particular in Northern Europe. These have been small open economies. And I think some of the egalitarian aspects of these economies came as a result of being open, or as an adjustment to remain competitive in the world market. And both Sweden and Norway, I think since the 1930s till today, had, for example, higher economic growth per capita than, for example, US. And when you combine this with that the fruits of economic growth were shared more equally here than in the US, I think these are things to notice for progressives that I think are around the table today. But unfortunately, social democracy in Scandinavia is in a disarray these days. What is the problem? I think, what are the signs of the problem? I think it's in part political. The social democratic parties here, just like in the rest of Europe, are sort of declining in vote shares. They used to get, in Sweden and Norway, they used to get around 50% of the votes, a little bit lower in Denmark. Today they have all social democratic party has significantly below 30% of the vote share. Inequality is increasing, in particular in Sweden. The welfare state is sort of becoming less generous in Sweden. They trim the welfare state and cut back both on the rules that give you money, and also on the benefits that you receive when you need social insurance of different types. In Norway, the welfare state is equally generous as it used to be, but here is a little bit more increasing wage inequality. So we have compared recently sort of the Northern European countries, including Finland and as well, and we see that all of them are increasing inequality in post-tax and transfer income across households, but for a little bit different reasons. In Sweden, it's basically a cut down in the welfare state, while in Norway it's more an increase in the wage dispersion. Denmark is a little bit of both, but more like Norway than Sweden. Sweden is extreme in the sense that the increase in Gini inequality when it comes to disposable income, I think is in percentage points higher than the increase in the US since 1985 up to today. So it's a tremendous, from a low level, Sweden is sort of increasing its inequality in a scaring manner. What's scaring in Norway? Well, I think Norway still has, I would say, Scandinavian equality in the 99% of the population. But the 1% richest top incomes in Norway, if you include retained profits in the enterprises, then the 1% richest in Norway obtain 20% of the income, which is the same if you correct also for retained profits in a similar manner. I think we have better data in Norway than in the US. It's easier to do it here than in the US. We can sort of calculate the retained profits and distribute it out on the shareholders with accurate numbers, actually. But if you do it in a similar way in both countries, then they have similar share to the 1% richest, which I think is scary. And it's unnoticed that this is happening. So why is it why couldn't we just say, oh, well, the social democracy is over? I think social democracy as an economic and political system was built up by piecemeal reforms. It was a gradualism. The Social Democratic Party mobilized for reforms, and that reform became a platform to sort of further advances. So it was sort of built up. Each step was taken when it was politically opportune to do it, and with the mobilization of both the voters, of the unions, and so on. This gradualism is important in the history of how social democracy evolved from the 1930s till, say, the 1980s, 1990s. But you should also think that this cumulative process can go in reverse, and it seems to be that is the case. One deregulation here laid the foundation for a new deregulation elsewhere. For example, in the housing market, they deregulated the housing market and wealth become more visible. Inheritance meant more. Then you get new reforms. You get the deregulation of the credit markets. You had to get rid of inheritance taxes. For example, Norway and Sweden doesn't have inheritance taxes anymore. And things like that is a cumulative, how should you say, the same type of it mirrors a stepwise building up, that each step may or may not, but each step may be may make sense in the sense that it solves a problem, but the whole chain of changes that it induces may lead to a society that nobody actually would like to have. There can be a majority in favor of each small reform or deregulation, but there would never be a majority if you had voted for starting now and voted for sort of an end product that you can expect later on, even though there can be a majority for each piece in the gradual adjustment. And that is because both the power of beliefs and interest of people change when you change some of the institutions in the country. And again, it's just the same as when this was built up. When you build it down, it has these cumulative, I would say, dangerous changes, because it's so difficult to sort of see that you oppose a direction more than you oppose each small gradual adjustment. And this tyranny of small decisions, I think, is very important for Norway. I thought I should just illustrate some aspect of what I consider to be the Scandinavian social democracy in a caricature. I do it in a way that I know that this illustration is wrong, but it will give you some idea, and it gives you something that you can keep track as I continue to speak. So I just show you this. It's a handwritten small slide. So I show it in the photo here on the side. So here it is. So let me just see what I have here. There are more to the story than this, but I have on this axis I have wage coordination, which seems to be has been historically extremely important in Scandinavia. I'll tell you more about this. Here I have wage inequality. So the higher you're out here, the more wage inequality. Here I have generosity of the welfare state. And here I have sort of acceptable globalization or international competition, how much both firms, enterprises, unions, and so on accept of globalization, or that are feasible globalization given the attitudes and the protests in the population. And so these are meant to be sort of connect. Of course, the reality is not as recursive as this little diagram show, but it shows some of the essence here. Let me start on this connection between wage inequality and coordination. This started in the 1930s in Norway. It started with a conflict in the union movement. Workers in what we call sheltered industries, they were protected somewhat against the crisis in the world, in the international world crisis, but the huge part of the labor force that worked in export-oriented firms, they had to face wage cuts in order to keep their jobs after sort of international demand collapsed in the early 1930s in Norway. We had unemployment rates of around 20% at the time, so this was a serious thing. And so they took wage cuts, but they wanted the unions, for example, construction workers in the sheltered industry, sheltered for international competition, to be in line with their own wage adjustments. So they tried to force the other unions to adjust their wages. And that was, of course, difficult. But then the employers came in, and they became on the side of the metal workers in particular. That was the strongest union, both in Sweden and Norway. And they forced, and the employers, they threatened the construction workers with a lockout if they didn't go in line with the wage cuts that the metal workers had to decide. And this became the pattern. So this became the pattern after the war. It was already institutionalized after the war, and it was institutionalized as it was called solidarity negotiations. Even though these construction workers were forced in line, they came into sort of an agreement and accepted this pattern bargaining. And notice one thing, that this pattern bargaining is opposite to what is called pattern bargaining or otherwise, because then the unions pick the most productive firm, and they negotiate with that first, and then they say that all the other enterprises have to follow that pattern. But that is a tactic to raise wages. This was a tactic to moderate wages. You moderated the wages of the workers in the sheltered industry. And so that you had that kind of compression, that you reduced monopoly gains to unions in shelter, they were sheltered for international competition. But you also, in addition, since you took the wage structure into collective decision making, then you also changed the power inside the unions to much more lower ranks in the union, because there were more members there. So that means that you compressed also in other ways between firms in the same industry, between industries, and between regions, and between occupations. There are people who write about this. They say that in this period, then the union movement went from equal pay for equal work to equal pay for everybody. Of course, there was an exaggeration, but I think the whole period from 1950 to maybe 1985, I think that was a period with record high wage compression, and nowhere else in the world, I think, had such a compression of wages, no matter how you measure it. And let me move over to this again. So this is why the more coordination you have, the less wage inequality you have. And this has been the case. We saw it, for example, Sweden gave up a coordinated wage bargaining in 1983. Then wage increases start to rise immediately after that, and they re-centralized a little bit, but this is an indication that it matters. We also have sort of tested this theory of the link between wage coordination and wage inequality for this insurance principle that crisis in international markets, or problems, more competition in international markets, should lead to some sort of wage adjustment across sectors. We have tested that for all European regions using sort of the China shock, that when China entered into the world economy in 2000, 2008. And we have very much similar result, that economies or regions in countries with wage coordination, they had almost no unemployment consequences of China entering into the labor market. While similar sectors in countries without wage coordination had much higher unemployment as a consequence. We do this, I think we do this properly, but I don't take the details. If anybody's interested, I can expand on this. So there are many reasons why you have this wage coordination and wage inequality, negative slope of that. More coordination, compressed wages. The next year, it has been also something that we can see over the history of Scandinavia, and I think also elsewhere. I think you can see it even in the US, that it is when wage inequality is low, that you expand the welfare state the most, or you have the most generous welfare state. So the further down you are here, the higher the welfare generosity of the welfare state. And so if this was the case in Scandinavia, high wage coordination, then after a while you should expect generous welfare spending. Why is that? It's the simplest way to say it is that sort of most of the welfare provisions are normal goods. When you compress wages, keeping the mean constant, then you raise the wages for the majority of workers, and they are sort of easy to mobilize for expansion of health services, for social insurance, and so on, are normal goods that the welfare state provide. So again, the welfare state, in the Scandinavian context at least, is not a machinery for redistribution. It is simply machinery provisions of things that the market doesn't provide equally efficiently as they see it. Like healthcare, social insurance, in particular social insurance, I think have been very important demand for countries that are sort of so much exposed to international competition. Next round here, that is how welfare generosity allows more globalization, in the sense that it makes firms, it's cheaper for firms to be globally oriented, because the enterprises will know that they have an insured workforce. That means that they don't have to give them all kind of compensation that these jobs are insecure jobs, because we have been sharing via the welfare state, the welfare generosity, sharing some of the cost of the workers to be exposed to all these risks in the jobs. So you will see that the maybe a little bit speculative for this illustration, that the more generous the welfare state, the more acceptable is globalization in these societies. And you see it also in its surveys. The protest against globalization in Scandinavia has historically been very low. Say 70% say that it is okay. I think the numbers are just opposite. That 70% of the, at least in some surveys, 70% of the US population say that globalization is something that's bad for American workers. And it is because Scandinavian workers have been insured against it. And then, of course, the more globalization, then there is this link that I said that globalization put pressure on the union structure, put pressure on them to cooperate. This was what happened in the 1930s. This was happening in all the periods after the Second World War, in the sense that this pressure from abroad led to coordination, cooperation inside the union movement. And it's done in many ways. It is solidarity negotiations that I mentioned, and also in other ways, we're sort of providing some insurance that they promise. We adjust our wages, for example, that sheltered unions adjust their wages, because some of the sheltered unions produce inputs in exporting firms that if they become more costly relative to the competitive situation in the world market, well, this is a drag on the competitiveness in these sectors, which again will be some sort of punishment to the workers in these sectors. And this has been sort of operating and been open, everything. And so I indicate here sort of what I consider to be the Scandinavian equilibrium. This is one where you have high wage coordination and therefore low wage inequality. Low wage inequality support generous welfare state here. And with a generous welfare state, then people are not so hostile to globalization, and they accept even to move to districts in Norway where you have, or in Sweden, where you have only one enterprise that are an exporting firm, but they know that if this firm if something goes wrong there with their employment, if it is insecure, they are insured by the welfare state, and that makes these firms, enterprises, more competitive. And since you have this globalization and these possible fluctuations in the world economy, you sort of confirm that it was smart to have this wage coordination in the first place. But it's also a possibility to sort of have to have little coordination, higher wage inequality, less generosity in the welfare state. With less generosity in the welfare state, you have not these same global perspectives on the competitiveness, and you're more restrictive in that, either because it's more costly or for different reasons. And since that is the case, you are not so globally exposed, then the wage coordination is. So why is this going the wrong way? Well, what you see immediately here is that if you have some changes, you have dramatic self-enforcing mechanism. Say that you have less impact on the wage inequality. You move this curve out like this. It has repercussions for both the welfare state, which becomes less generous in the sense because there's more inequality, there's less common needs in the population and so on. So just shifting one aspect here, we have sort of general equilibrium repercussions that are of significant importance also politically and economically, not only in statistic matter. We have tried to estimate many of these curves, but it isn't as simple as this, but for the illustration, I use this. We can also see, for example, the Swedish case of the decline of egalitarianism in Sweden as basically a shift inwards in this curve here, that after the banking crisis in particular in Sweden in the 1990s, they become too afraid for sort of running the deficits in the fiscal budgets, and they sort of much more difficult to fund the welfare state for the Swedes, no matter whether you had a bourgeoisie government or you had a social democratic government. This curve was moved in with repercussions throughout the whole system. You can also have this, that the connection between welfare generosity and sort of the the acceptance of globalization can also change for different reasons. So what the main thing that let me take this away so you can see my pretty face. That was a joke. I think the main story for why social democracy may dissolve is that there are these small, minor things that people don't care about. You're not mobilizing political parties for this, but it set forth a cumulative process that can lead from this first, what I call social democratic circle to a more, Anglo-Saxon type of society, also in Northern Europe. There are many reasons. There are many reasons for this. There are also a reason that I haven't sort of touched upon, that behind all this, that small wage differentials in Scandinavia led to innovation and structural change, simply because the small wage differentials meant that the most modern technology, the most recent advances were cheaper to use because you didn't have to adjust the wages. Wages were determined elsewhere, so that you could more easily invest. It was like a wage compression. It's like a subsidy to very modern firm, and it's a tax on very old-fashioned firms, because they have wage compression means from both ends that you compress wages, so then you drive out the inefficient and you invite more the efficient firms. For a long time, this was operating pretty much like I said. It's one aspect, I would say, of the Rehn Meidner model of how small wage differentials go along with a high level of modernization in the economy.
I'll have 5 minutes.
Yes.
5 minutes.
With that, with a link like that, then you're very much dependent on that wage compression should have this modernization effect. And I think for a long time, Scandinavia was pretty early both in using very modern technologies. They didn't invent them, but they used them, and it was profitable to use them, in particular because we had taken wage structure out of market competition and placed it into a more democratic decision by all the unions had a say in principle. So all the union members in principle had a say. And it's, I think that also enforcing. If you stop having this good cycles that we used to have, then then you have less productivity growth of this, and then you have sort of less funding for the welfare state, and it works in the cumulative way. And it's more sensitive to this, since you have sort of so concentrated decisions about wages and welfare spending. And one last thing that I will stop by, I said that there was an implicit coalition behind the Scandinavian social democracy that I sometimes don't think that are sort of recognized by everybody. I call it, there was an ends against the middle coalition. It was the most exposed workers in the international market, as I said, metal workers, but they had the employers on their side. So there was class collaboration of a special type. And of course, the retained profits. The unions retained profits in the firms, in the sense that they didn't take out everything they could from in wage negotiations, because they used the capital owners as savings machines, and they thought about them as doing the saving on behalf of the unions, on behalf of the population. But if you have too many of these capitalists, and they are too distant from the firms, and they are too much involved in the stock market, you don't get this connection between retained profits in the firm and the sort of making the firms more competitive, investing more, training their workforce more as they used to have. And so it seems to be the case that this coalition is breaking up. And of course, it was ends against the middle, and the middle has grown. The middle has grown in size, because you can mechanize jobs in the exporting sector. They are commodity producing, and that means that you can easily mechanize them. A lot of the middle class in between them, they are working in more sheltered industries. They are working with services, education, all that, where mechanization is not the same type of option. And that means that, that there are more people there, and you get sort of, a riot from the middle. Against this coalition with the ends the low-paid workers, at least in the lower than average paid workers and capital owners. And you had also this. It's very difficult, and this relates a little bit to Giacomo's presentation. It's very difficult to have a system by coalition of ends against the middle, when you see that too much of the retained profits in the enterprises go to the 1% richest. As I said, in Norway now, 20% of the national income goes to the 1% richest. And of course, it's not tolerated by the major population. So I think reforms in the direction of guaranteeing everybody a sort of a share in the total value added in Norway and in Sweden and in Denmark and maybe everywhere. We call it Krahé and I. We have a proposal that's somewhat in the same type of reforms that we just discussed in the previous presentation. A universal basic share, which is a citizen wage or a bonus related to calculated as a certain share of the national product. And of course, let me just finish and then I give up. Then I stop. This was part of what Scandinavia had. We had it via welfare spending combined with this solidarity negotiations or bargaining, that we guaranteed almost everybody a certain fraction of the value added in society. And there was a sort of guarantee. You built up institutions, not with that purpose, but in effect, it worked like that. When this is destroyed gradually, then you don't have this feeling that you are sharing in the rents of society, the rents from trust, the rents from cooperation, the rents from having no strikes, no lockouts, the rents that are created by having a decent society that is shared unequally. And then people are not so much motivated to have a decent society because they don't obtain the shares, a share in the benefits of it. So therefore, we thought that these systems like this could be strengthened by sort of having a guaranteed universal basic income calculated as a share, not to replace the welfare state, but to supplement it. I stop there.
Thank you very much, Karl. So we have questions from the panelists. Comments?
Francois.
Yes, Krahé. Thanks for the talk. Could you elaborate a little bit on one of the last thing you said about the loss of the political equilibrium? So I mean what you call this coalition of the ends. So I understand that you have the worker, I mean the exposed workers. I would suspect that the exposed workers is a group that is becoming larger and larger due to globalization. And then, but you seem to say that the group that is becoming larger and larger is the middle class, which, I mean, tends to break the equilibrium. And this seems to suggest that the middle class is against this, those institutions that promote wage inequality, which seems to go a little bit against the typical median voter theory. So can you elaborate a little bit on the components of this equilibrium? Thank you.
Yeah, I like this question. Let me first say, I think the ends against the middle, that was an implicit coalition. I think it was established in the 1930s. I don't think it happened in all countries, but I think it happened in more countries than just Scandinavian ones. I'm quite sure that it happened in Sweden and Norway, and it is, for example, it is the muscle of the employers that help coordinate wages, because we gained to free ride on the coordination of the others, and that was sort of prevented by the threat of a lockout from the employers. So this was implicit. It was, think about Sweden. It was Wallenberg. Is Wallenberg the big owner? It's very easy for to make an alliance. He was actually a member also of the Social Democratic Party. And you have similar, Røkke is a big capitalist in Norway. He's also a member of the Social Democratic Party. You will see this, it is implicit, of course, but I think everybody knows it. We have this pattern that exposed industries go first in the wage negotiations, and then you have all the school teachers, university teachers, health and services workers, and so on. They go after and adjust to the wages that these exposed workers have, and they are becoming relatively smaller in numbers because of mechanization. Basically because of mechanization, that we are equally dependent on international markets, so we are equally dependent on remaining competitive, but we don't have a composition of the workforce politically that is so easy to have the same type of compression of wages. Maybe some people wouldn't like this compression at all. Of course, there are all kinds of unions, middle class unions, that would like to free ride on that. I don't have a strong say about that, but that is how we did it for many years. The political economy, when it comes to sort of the support of welfare spending, I know that this is somewhat controversial, but it's not. We use the median voter theorem that is just to point at which groups are the decisive groups. That's not the quarrel. The quarrel is whether it's redistribution. Redistribution, that's an inferior good in the sense that the richer you are, the less you would like to have redistribution unless you are altruist. So the richer you become, the less redistribution you will have, pure redistribution. That is the standard model of the welfare state, which I think is a bad model, by the way. I think the correct model is much more the provision of things that are normal goods, in the sense that if you are in the same social situation, the same exposition to risk, the same attitudes to others, and you have everything remaining the same, but just you have a higher income, then you would like to have more welfare goods from the welfare state, because they are normal goods, the political demand raised with that. And that's what I think why wage compression stimulated the growth of welfare spending. Across countries, you see the pattern very clear. The most generous countries in welfare spending have the most pre-tax, the lowest pre-tax wage inequality. The least generous welfare countries with least welfare, generous welfare states, they have pre-tax wage inequality that's much higher, US versus Sweden, for example. So I think I'm exaggerating something, because there are nuances to this picture that even I would know about, but I think this is the main picture. Sorry for being long.
Giacomo? Giacomo?
Yes, so thank you very much. I wondered what is the role of value systems and ideology in the story that you have told about the development in Scandinavia. So one may have expected that actually Scandinavian countries are a kind of forerunners, an example for the rest of the world, and that solidaristic values and egalitarianism would be reinforced over time by the positive experience of Scandinavia. So there was also a book by Joseph Carens in which he imagined also a situation in which people would basically work out of a sense of duty in order to pay taxes to finance the welfare state. And I think Kantian optimization would also, if anywhere, be found in Scandinavian countries. And so my question is, why it seems that we have not observed an enhancement of those egalitarian values in such a way as to prevent this reduction, this rolling back of the welfare state, abolition of inheritance taxation, and so on.
I think there's something of the kind that you are mentioning, but Scandinavians are sort of branding themselves. They're very good in sort of branding egalitarianism, that they are special. That for example, as you know, Sweden was the least egalitarian countries in the 18th century. And Norway, I think something similar, but not as bad as Sweden. Sweden was very inegalitarian, both in voting rights and in political rights and all that. But it seems to be forgotten. They put too little emphasis, I think, in the history of these countries to emphasize the big break that came in the 1930s. Sweden and Norway had the world record in lost days of work due to strikes and lockouts in between the First and Second World War. Nowhere else in the world they had so many working days lost. After the Second World War, Sweden and Norway had the world record in the absence of strikes and lockouts. And I think it wasn't a prerequisite that these things, that the people had trust, that people had this attitude that you mentioned. It was a result of the changes. For example, it's very easy to trust when you have some power in unions, for example, that if the other guys, you can trust employers, because we know we have this organization and they can harm the employers if they are not behaving in a decent manner. So I think you are right in some aspect that some of these things, trust and fellow feelings, solidarity, but they are not exogenous. They are sort of dependent on the institutional arrangement. I would like to discuss more, but then we have to be in the same room.
Pranab? Pranab?
Unmute,
You're muted.
Pranab.
Yes, sir. Trying to. Okay. Thanks very much, Karl, for that talk. And we have discussed some of these issues before, but let me raise something that you didn't touch on, but we have discussed before. I think wage compression of the Scandinavian kind is often regarded as infeasible in many other countries for various reasons, for the coalition kind of reason that you mentioned. But one very simple reason people have talked about is that that kind of wage compression would lead to emigration of the high-skilled people. So that is a problem. But I remember once discussing that with you, and you gave me the impression that these Scandinavian sociocultural attitudes are such that this kind of immigration is not a big problem. I was wondering, in the unraveling of the equilibrium that you're mentioning, does that play any role? That kind of compression is getting more difficult to keep the highly skilled people, highly talented people in the country.
I try to be brief. I think you're right in everything you said, even the caricature of what I had said previously in previous discussion. I think that for a long time, at least, the wage compression in Norway didn't mean that engineers in Norway went to Germany where wages were higher. Maybe the difference wasn't high enough, but I think this is just a constraint. It is a constraint, and I think in many countries it hasn't been exploited to the full, and there's no big flow of high-skilled people migrating. Of course, there are some, but that's always been the case, also when we didn't have wage compression. So I agree, this is a constraint, and you can't compress too much. There are conflicts over degrees of equality. When it comes to this, is not feasible for other countries. I agree to that, at least not in the way it was done here. I think every country has its own arrangement. But it's something with the smallness of these countries that help coordination. I think so that it's easier to coordinate in a small population than in a large. But take South Korea, for example. South Korea had wage compression compared to others. It was done in part by subsidizing education, that you have a flow of more educated people. It was also done, I guess, I ask more since you are a specialist, it was also done with the land reform, in the sense that the outside option of being in agriculture, or your family being in agriculture, sort of made it impossible to reduce your wages so much. So there can be different institutions, but the impact of wage compression in South Korea and in Sweden, I think, were very similar, in the sense that you got modernization, you got structural change, you couldn't operate in efficient firms because labor was too expensive. So I think the means of achieving compression can vary across countries. And I know I took one very special country, South Korea.
One small point.
Oh.
In your diagram, Karl, if you include migration, what we just discussed, as part of globalization, then in that fourth quadrant.
And I agree. And that's that's also what's happening to some extent. For example, we had a lot of Polish migrants coming to Scandinavia, and it basically destroyed one sector. I think they were good workers. There was nothing wrong with them, but there was something with the hiring of them. But what is done here, and they try to extend the labor contracts, so it is also applied for Polish workers. But there's a lot of criminal activities in the labor market, I think, throughout Europe, and in particular in high-wage countries like in Scandinavia. But there wouldn't be an infinite flow of Polish workers. I think most of them who are willing to come are already here now. And as Poland takes off, we hope, maybe they would like to go back. Or maybe they will stay here and then they become like us.
Suresh?
Yeah, so I posted the link. I'm always sort of unclear on, I feel like different people give different answers about the role of the pre versus post fiscal inequality in Scandinavia. And people will say, oh, look, Sweden actually has pretty high levels of market income inequality, and that it's in fact compressed by the tax system. And I one kind of empirical question is just like, how much of this has to do with whether or not how we calculate the value of public goods provided by the state, and how we allocate that. So that's one question. The second question is something that came from, I was talking to the LO. I gave a talk at the Swedish LO, and I was like, why has union density fallen in even Sweden and Norway? And so what is going on that makes it actually like this common trend, even in the countries that are most sympathetic to unions, that have very generous laws that sort of are making it so hard to generate union density in the service sector even in these countries?
Yeah, thank you. I take the unionization first. I don't think the picture is not dramatic in Norway. Norway always have a lower level of unionization than Sweden. So we are sort of declining by a couple of 2 percentage points over a period of 15 years. But we have a unionization rate that's a sort of 50, 55 between there. Sweden used to have 80, and I think the changes in Sweden is dramatic. It used to have some advantages that you were better insured if you were a member of the union, and they took that away. And then the unionization declined. It's also there's something on the composition of sectors. Then when you have a decline in manufacturing and a rise in services, the traditions of unions in services are not so solid as it was in manufacturing industries. So if you control for sector, then it's no decline. So the manufacturing is the same, but it is a composition of. So I think that is some of the basic things. Denmark again is between Norway and Sweden. Sweden had the Gent system that had insurance in the unions. When the other question was about
free versus the role of the fiscal system.
So the pre-tax wage distribution, I'm quite convinced that is more narrow. If you take the 90-10 gap in Sweden and Norway and Denmark is like 2. If you take the
but that's not the income. But like if you think of consider the whole market income distribution in Sweden, it's still pretty unequal.
I agree to that. So the high gap between the low gap between 90 and 10 in Scandinavia is combined with a reduction in the working time. So that means that the earnings distribution is you take something out in a sort of free time or vacancies and so you work less. You work much less than the average of the OECD countries. But so this question is whether you should take it. That is a choice variable in the sense that how much you would like to work, and I think the opportunities that people have, then you should also allow them to consume some leisure time. But we have also some forced part-time work, which is sort of, in particular for women, which is that you don't get the full position in the health sector, for example, which is very bad for them. And that, in my numbers, that will show up as egalitarian, but they would like to work more.
Okay, thank you very much for Karl and for the discussion. I think we'll break for 9 minutes now. We'll be 5 minutes later in meeting at 12:05, 9 minutes from now for Pranab Bardhan's talk about social democracy in rich and poor countries. Bardhan is a professor of economics at University of California at Berkeley, and is going to talk about social democracy in rich and poor countries.
Thank you, John. And thank you for inviting me. I was, as you know, I was a bit hesitant in participation, or at least presentation, because what I'm going to talk about is very elementary stuff. This was originally written for general audience, not for a scholarly audience like this one. General readership, not for a scholarly readership like this one. But here we are. And also, the social democracy I'm going to talk about is not the Nordic kind that Karl just talked about. It's the more watered down version. And Karl already has shown some despondency about the Nordic version. So I'm not sure whether this applies also to the watered down version. I'm going to suggest, if you say, what is the possibility of rejuvenation? And of course, I'm taking both rich and poor countries. I would say the possibility is not very high, but not very bad either. If some things that social democrats take care in paying attention, it is possible. But how likely, it will vary from country to country. Now, of course, I'll go very fast because most of it is very well known to you. Recent decline of social democratic parties associated with decline of trade unions. A lot of reasons: employer hostility, globalization, automation, corporate concentration. Also, two kinds of technological demographic change. Oh, by the way, I've just quickly made some slides of the text, but details are in the paper. I'll just flag some of the main points. So two kinds of technological demographic change. One is oops, what did I do? One is the more professional and educated labor force, which is as opposed to the manual workers, less skilled. And the second technological demographic change is increasing importance of the service sector, including caregiving workers who are more difficult to organize. There's also labor fragmentation. And if you particularly think of poor countries where informal workers are the majority, countries like India, Kenya, Uganda, Peru, Mexico, and so on, the informal workers are often the majority of workers. And so that's a major source of labor fragmentation. And now, of course, even in rich countries with the gig economy, a significant proportion, not yet very large, but significant proportion is becoming informal. Problems exacerbated by the pandemic for this labor organization: remote work infeasible for many with digital divide and the nature of the work, more people pushed into unemployment and poverty, income inequality rising, and corporate concentration accelerated. Of course, I think more than inequality, insecurity, economic insecurity may be more salient in the workers' lives. But this is exactly where, on the issue of economic insecurity, this is where social democracy's traditional area of strength, support in the face of precarity of work and economic insecurity in general, that is where social democracy can play an important role. And I think there is greater appreciation now of a more, particularly in the last couple of years, of a more assertive role of the state, the need for that. There's also a greater appreciation that markets are ill-equipped to handle the risks of pervasive catastrophic risks like the pandemic or climate change, and also more appreciation of the need for public investment in infrastructure, health, education, research and development, and domestic and international public goods. On the other hand, while there is an increased awareness of the larger role of the state, social democrats should be wary that the surveillance and monitoring power of the state has increased during the pandemic. And some states use the opportunity to over-centralize their power, roll back environmental regulations, etc. But there's also an important issue of cultural backlash, which I find at least social democrat economists don't pay enough attention. One should keep in mind that the struggle, particularly in fighting the populist opposition, is as much cultural as economic. And the cultural backlash is among the socially conservative workers who do not agree with the liberal social democratic professional elite. So I think what is needed is more open attitudes toward poor workers from the ethnic majority communities and more sensitivity to their social demographic threat perception. Social democrats are justifiably preoccupied with issues of historical injustice to some identity groups, should be alert not to alienate many other workers who feel left out. After all, the strength of social democrats is not in fighting battles on new frontiers of identity puritanism, but in finding ways of transcending divisions of society based on identity. Also, of course, this is well known, the increasingly big battle is in breaking through the walls of misinformation and conspiracy theories in social media. Now I'm going on to some modifications that social democrats have to pay attention to in the capitalist mode of production. And this is where I should mention that the major distinction between social democracy and democratic socialism that I'm making is that social democracy essentially has the capitalist mode of production. However, for social democracy to have a good chance, there has to be serious modifications in the capitalist mode of production without giving it up. That is essentially capitalist. And the rest of my talk, I'm going to talk essentially about these modifications which social democrats should pay attention to. One is more worker participation in the governance of the corporate firm. There, I personally think a very important issue is the issue of innovations, because quite often the more worker participation in the governance of the corporate firm, the question is raised, will the firm then retain its innovation which is supposed to be a strength of the capitalist mode of production? There, I cite the evidence. There's evidence from other countries, but much of the evidence is from Germany, the German works councils in large firms, where now worker representation in supervisory boards is in parity with shareholder representation. And we now have observational as well as experimental evidence that such shared governance significantly raise productivity without negative effects on profitability or capital investment or capacity to raise external finance. There is a recent, in fact, 2021 article in the Quarterly Journal of Economics on the German evidence and experimental evidence on this kind of issues. There's a lot more observational data on the German's co-determination, effect of German co-determination on productivity. It's also possible that, when we talk about innovation, one simple distinction is between incremental innovation, which is more associated with cases like Japan, South Korea, Germany, and whereas the United States is associated more with disruptive innovation. And it's possible that that in terms of incremental innovation, there is quite a bit of possibility of social democracy with worker participation in the governance of the corporate firm to have incremental innovation. In the paper, I also cite some evidence from China on mixed ownership firms in innovations, mixed in private public. China, of course, is not a democracy, but the evidence that I cite for that democracy is not strictly necessary. It's the innovation effect is following from the ownership pattern largely. Of course, the state has a catalytic role in public research and pump priming investment and also starting initial entrepreneurship. But here, I think it's a very important point is that the state should promote not just the rate of innovation, but take particular care of the pattern of innovation. The latter should conform to social priorities like that of labor absorbing rather than labor replacing innovations and environmental goals. Daron Acemoglu has several articles now in the context of artificial intelligence, innovation in artificial intelligence, why it is possible. It's not going to happen unless something is done about it. It is possible to have labor absorbing rather than labor replacing innovations. Now, I just talked about Nordic social democracy, and it has always been known that Nordic social democracy has been quite conducive to innovations. Its special feature of wage compression may be difficult to replicate in other countries, but another aspect which Karl didn't go into today is its active labor market policies. This is something that even the watered down versions of social democracies can adopt, is active labor market policies, retraining and making workers more employable as markets and technology change. That should be more replicable elsewhere. The first aspect was about worker participation in governance. The second aspect I'm going to talk about is reform in institutions of collective bargaining. Number one, sectoral or higher level of bargaining may help in weakening employer incentive to curb farm level unions. Countries like United States or India have highly decentralized level of bargaining, which doesn't serve this purpose. Second point there under this is that following ILO conventions so that employers do not get away with impunity in damaging efforts to unionize, something that's very common in the United States, which essentially is not following ILO conventions. Of course, I understand the United States to this day has not ratified many of the ILO conventions, but under ILO conventions, you cannot get away with impunity in damaging efforts to unionize the way one does in the United States. More use of social media to mobilize younger workers. Then worker demands as much about work conditions like relentless algorithm-based work pacing as about wage settlements. And of course, reaching out more to informal and gig economy workers. The next issue after collective bargaining is reform in public finance and banking. Democratize the sphere of capital, both tangible and intangible. Then somehow I'm losing some part. Did I? Essentially, I've lost that part of the, just a minute, why can't I go up? Anyway, I know what I'm talking about. So one of the things I'm suggesting, and some other people have suggested, that in the big tech firms, one is, of course, anti-monopoly that everybody's talking about in the United States, antitrust, anti-monopoly, and do something about these big firms. But more than that, the big firms, the big tech firms, which essentially are harvesting data from all of us, they should pay for it. There have been some proposals of big tech firms paying for data collected and putting them in some earmarked public fund. In fact, some communities are already starting with, I know there is talking about data commons. In Barcelona, there's already, I'm told there is Barcelona data commons. So more community control over data commons should be part of the Social Democrats' agenda. There's another issue that's come up is public option in the financial system, including citizen accounts directly with the central bank. This may be part of the digital currency system that many central banks are currently exploring. In general public finance, there is a change in the climate of opinion on the need for more taxes on capital or wealth and more progressive taxes on income, capital gains, and inheritance. At least the decline in tax rates of recent decades should be reversed. Now, to this, there's obvious problems of capital flight and tax evasion. But on this front also, there's some change. More transparency than before in what used to be a completely murky world of international wealth holding, and more intergovernmental exchange of financial information is already taking place. And I think that's in the right direction. There's a lot to be done, a lot more to be done, but it's in the right direction. There's also more recent, in the last few weeks actually, now animated talk about international minimum corporate taxation. And the US government has already provided some support, although the minimum that the US government has proposed is very low. It's 15%. Many people think it should be at least 20-25%, the minimum rate of corporate taxation on which there can be some international agreement, at least among the G7 or G20 countries. In any case, some international agreement on restrictions on short-run capital mobility, I think, is absolutely essential for viable social democracy. Short-run capital mobility should be restricted for retaining the bargaining power of workers in a social democracy. In other words, there's a need to revive this aspect of the Bretton Woods system. But of course, we know that since the Bretton Woods system, among other things, there have been some obvious technical limits imposed by digital superconnectivity, which makes it a technical feasibility problem of restrictions, short-run capital mobility, somewhat acute. Also, regulations on excessive financialization of capital is essential for social democracy. And the last issue that I'm going to talk about is public funding of elections, which I think is extremely important for a social democracy. In 2020, US presidential elections, a total of 14 billion was spent in political campaigns. In India, even legal corporate donations to the ruling right-wing party are many times the total of all the other parties combined. So in that sense, this really seriously distorts democracy part of social democracy. This can make a mockery of democracy and rule of law when these laws are for sale, essentially for sale, because of this public, this is the way elections are funded. Of course, public funding has to be associated with strictly enforced limits on and independent auditing of expenditure by both candidates and parties. Relatively significant public funding of elections exists today, not enough, but to some extent in Belgium, Canada, France, Germany, Spain, and Sweden. In Sweden, where corporate donations used to be a major source for political parties, as far as I know, public subsidies are now generous enough for the parties to voluntarily stop accepting corporate donations. And that's where I'm going to stop. Essentially, my purpose was to flag some of the issues that social democrats, if they want social democracy, even the watered down version, not the Nordic version, watered down version to be viable, there's some issues that they have to pay particular attention to. That's where let me stop. Thank you.
Thank you very much, Pranab. And as the chairperson, I'm grateful to you for staying well within your time limit. So let me open the discussion. I have to somehow see the gallery. Maybe you could stop your screen sharing now, Pranab.
Oh, okay.
Kala, you have a question? You have to unmute, Kala.
Okay, sorry, I forgot. It's a little bit of a comment that you said about the technical change and social democracy. I think what you said about when you have more higher level negotiations, then employers are not so interested in curbing the local unions. I think that's extremely well taken. It's very much the experience here. So when you took wages out of market competition and placed them sort of higher up in negotiations, then you had much more freedom in the workplace. You get much more autonomy in the organization of the work, that they're much more self-determination in the local level in the different plants. And the reason was exactly what you said, that the employers, they were not afraid of this because the wages were determined elsewhere. So then you allow workers to have much more self-control. And I think that is an aspect of social democracy that's underappreciated, because they think about it as highly centralized, but it is also highly localized in that sense.
Thank you. And this is a problem both in United States and India.
Yeah.
I'm going to read a question from the audience, from Maurice Bondelli, who's a graduate student in political science at Yale. So he writes, are we confident that the left should de-emphasize the second dimension issues, that is ethnicity, gender, and so on, to succeed? Now that seems to go against what you said, Pranab. You said we should pay attention to that. If anything, evidence from Europe suggests that doing so alienates sympathetic constituencies and leads to a fragmentation of the left, strengthening, for example, Green parties. Historically, it's not true that the left has only succeeded when competition is single dimensional, e.g. the New Deal and Switzerland after the 1960s. Pranab?
Yes. Actually, I'm not saying that, well, by the way, my watered down version of social democracy includes the Greens. So it's a much larger tent. But the identity, what I was trying to say, that the cultural part is quite often preoccupied with identity issues, and which I understand that because particularly in the United States, but also in Europe, in the context of immigration, these cultural issues are very important. But I find that on cultural issues, unless social democrats are careful, it's very easy to the whole area being hijacked by the right wing. And this has happened in a big way. And since I'm talking not just rich countries, but also poor countries, in my country, India, it's now the right wing has hijacked on the cultural issue of religion. So and let me give you the example of India, that sometimes when the right wing hijacks on the issue of religion, the left then also tries to talk about religion, etc. There's no way they can win there, because anything they do, they can outdo, the right wing can outdo. So I'm not saying the cultural issues should not be talked about. I'm somewhat distressed by what I see in the United States of what I called identity puritanism. And you get preoccupied with that. I'm just saying that one is particularly sensitive to the cultural sensitivity of the majority workers, not just the minority workers. But I'm not saying we should pander to them, to their prejudices, to their racism. But I'm saying one should be very sensitive about that. And there are now some work. I just saw a book, how to talk about both socialism and race together. I think it's actually a Berkeley lawyer who's written a book on this. But so there are ways of finessing. I'm just saying one shouldn't be too much preoccupied with that. But otherwise, generally, I agree.
Marc?
Yeah, thank you. I just would like to comment on that because basically over the last 20 years, the political landscape is determined by this issue, the cultural backlash between liberal, secular, upper middle class and the socially conservative workers. And finally, in the last couple of years, the social democratic movement started to be successful in Turkey, exactly following what Bardhan is suggesting, mainly ignoring the right-wing provocative comments or even policies when it hurts, even when it hurts, they just ignore it, okay? Because just as Bardhan said, whenever you engage in this fight, right-wing always wins. I mean, that's a battle to be lost. So what they do is that they ignore the right wing triggering almost internet troll type comments and policies, and instead they focus on what they want to do. They mostly economic issues, and when they have a cultural issue, they should set the agenda. If they follow the right-wing agenda, it's all. I think this also. I believe this is also the strategy of the Democratic Party in the U.S. these days. Like Mr. Potato Head, Dr. Sales and cancel culture. Democratic Party seems to ignoring those issues, and I think they are becoming successful. I just want to comment on that. And this is what we are experiencing in Turkey, and it's working fine now.
I quite understand.
Giacomo, Corneo?
Yes, I have two questions. So many of the things that you flagged are already there in Western European countries, but are not there in the United States. And so the first question would be, so now with the Biden government, what do you think are the key variables that will determine whether the US is going to embark on this social democratic project or follow a different route? And the second is a smaller question. You mentioned the desirability of restrictions on short-run capital mobility, but you did not make them precise. What are exactly the restrictions that you are that you have proposed? Thank you.
On the issue of Biden, I think others can speak more with authority on Biden and the United States. In my judgment, I think the social democratic project of the Democratic Party in the United States is hanging by a very slender thread. I'm hope they will succeed, but it seems to be that it can go any day, maybe even as early as next year when the congressional the elections take place. And there, I think they should try, and I'm quite pleased what they're trying to do, in a way, sometimes even better than some Western European countries. Look at what Macron in France is doing compared to that Biden is doing much better. But I think Biden's, how long this will go on, I'm not sure. So I'm not very optimistic, but I hope they succeed. On the issue of short-run capital mobility, no, the restrictions that I have in mind are exactly the kind of restrictions that we used to have in the Bretton Woods system. Before the Bretton Woods system was given up, this was the thing, that long-term capital mobility was allowed, but that exchange control and capital mobility, and some countries, by the way, has retained much of those restrictions. For example, China, India, and many developing countries have still retained quite a bit of control over capital movements, short-run capital movements. But I think even there, as I mentioned, technically it is becoming very difficult, because with just with a click of your mouse, you can transfer billions of dollars. But it is possible to check that. But I think it's extremely important for labor to keep any bargaining power, because labor is not mobile, but capital is. So in that asymmetry, because of that asymmetry, one has to do as much as possible to restrict. But your question was how much? I haven't given much thought to it, but to start with, you can go back to the Bretton Woods system on that point.
Suresh? Mute, unmute.
Yep. So my question is kind of about, you only at the end there talked about, the issues of money in politics and et cetera, but it really seems like prior to fixing the social democratic project, we have a kind of more fundamental task of fixing like the democratic project, of just like, getting to a place where we actually think that the electoral systems are effectively aggregating some sort of like reasonable aggregation of of individual interests. And this is obviously an issue in India, it's an issue in the US, it's an issue in lots of in lots of Europe. So I'm curious, like, aren't we kind of putting the cart before the horse in some sense of like having great ideas about the economics that we really kind of fundamentally don't have the political institutions that we could possibly hope to implement sort of any of the social democratic projects we've been talking about today.
No, I generally agree with you, but that I think in the expression social democracy, democracy should come first. Because if you don't have democracy, then you might as well forget about the other part. But I think there is not, the cart horse image is, metaphor is not quite appropriate, because I think in trying to do something about the social part, you also strengthen the democracy part. To give you an example, I think if we could strengthen trade unions more, I think that will also strengthen political democracy.
So let me give you a counterexample of that. So I've been reading about how, like, in the works councils of Germany, for example, the AfD has actually been successfully organizing works councils in Germany. So it's like, you know, the same mechanisms for building representation broadly can be as easily captured by anti-democratic populists as it can be by leftists. So if the working class is fascist, then institutions that empower the working class will implement fascism.
On that, I entirely agree. I'm hoping that working classes has not become fascist, not even in the very extremely right-wing dominant countries now. But what I'm hopeful, one of the reasons I think democracy, and let me go the other end. One of the reasons democracy has become weaker in many countries, including in India and the United States, is because trade unions are not strong. And it's also related to the cultural backlash issue. Earlier, when the trade unions are stronger, they used to play an important role in the taming the nativist passions, in transcending them, the nativist passions. And now that the trade unions are weaker, it's those cultural backlash by the right wing that hijacked by the right wing happens much more often. So in general, while I agree with you, your general thrust of your question, I would say that these things have to be tried at all ends. Even in the social end, if you can succeed a little bit, it will also help your democratic part. I agree that they may not always work, but I think in some countries, in many countries, I think there's a lot of scope for doing simultaneously at both ends, both the social and the democratic.
So let me then just kind of ask a conjecture. So for example, in terms of a priority thing, here's a thought, for example, that the data commons point you brought up earlier, you know, if you, example, like made that so that ad targeting was way more costly, and so that like killed a lot of the incentives to the misinformation stuff, was that you were basically like curating the advertising environment and much more intensively. You could imagine that that's like kind of a 21st century version of this, where you kind of solve a sort of economic problem of paying people for their data, but in doing so, you kind of are also strengthening some sort of mechanism for protecting people from like misinformation.
Right. Now there, I was not thinking about so much about the misinformation issue.
I'm just saying there's a complementarity there that like the.
Sure. They can be complementary. Yeah, I agree with you.
Marc?
Yeah, it's along the same lines as Suraj's question. So if you had to put a priority order on all the good measures you have listed, of course, I'm sure it depends on the context and the political context and so on, right? But choose your context and then give an answer if you can. I'm always asked this kind of question, so that's why I'm curious to see what you think.
My context is the country where I'm from and the country where I live, India and the United States. And I know that many of the things that I'm talking about are quite rudimentary in the context of Western Europe. But even there, things are getting weaker. But the main context I have in mind is United States and India.
Roberto, do you have your hand up?
I just wanted to say that I agree with pretty much everything Pranab said, and I would only make a small modification to what he said. So I completely agree, for example, that there is no need to think in terms of a priority to the battle for democracy as opposed to social democracy, because the two things go hand in hand. And it's not just a theoretical statement. I mean, if I think about my own country, Italy, for example, it's only been when the social movement and the left were very strong that political democracy was actually pushed forward. So the battle for the right to vote and things like that always went hand in hand with a very strong working class movement. I mean, Suresh is obviously right that empowering the working class in the sense of creating institutions is not enough, in the sense that these institutions can be captured. So my only modification to what Pranab said would be that the key to making all the list of brilliant, the entire list of brilliant ideas in your program would be, social conflict with a broad umbrella kind of coalition, as opposed to institutions per se. So what we desperately lack now is not so much a list of excellent ideas. I mean, I could subscribe to each and every one I do subscribe to each and every one of the measures you mentioned. It's the legs on which these measures are supposed to work that we lack. And therefore, I think social conflict and a strong social movement is the key to both democracy and social democracy.
While I agree with you, Roberto, don't you think trade unions, strengthening trade union, which I emphasized a bit, is one of the institutions?
Yes. Yeah. Not so much work council. I mean, the institutions as in work councils, which is the example that Suresh was giving. And not so much so for example, one of the problems these days is that in Italy, union density has not declined so much, but unions have largely changed their role. And now they, for example, so why do people subscribe or become members? Partly because they provide services. Now, that kind of strengthening of trade unions, I'm not sure is very congenial to the kind of project you have. And at some point, they become pointless, or they can be easily captured by the labor aristocracy or even right-wing populists, etc. So it's trade unions must be strong, and I couldn't agree more with that. But in the context of a strong social conflict and strong social movement.
In other words, in order to do things to reduce the chances of capture, you need some social movements even outside. And that is certainly important in developing countries, which I'm talking about partly, is where unionized sector is a very small part. So it has to be strengthened by also from outside, the other kinds of movements, which are, for example, I talked about the formal and informal sector. The informal sector is mostly self-employed people. So they're not the traditional kind of trade unions that we usually think about. But there are now small numbers of self-employed workers' organizations. And that's part of a community movement. And the more we have that, I think that can work toward not allowing the trade unions to be captured. So I think the outside social movements become very important, no doubt about that.
John,
thank you very much.
Can I make a very quick remark? Very quick. In Karl Moene's talk, one thing that struck me was that he reminded us that before Scandinavia and the Nordic model became the Nordic model, they had the highest rate of the highest number of working days lost in the world. And I don't think that's a chance. I mean, most people think of the Scandinavian model as, peaceful collaboration, blah, blah, blah. But in order to establish it,
right,
they fought, and they fought pretty hard.
Right. Right. No, I agree.
Kalle?
Remember that Finland had civil war between the wars. So it was really a serious civil war, and Finland became just like Sweden later on.
Mhm.
I don't see any more questions, so I'm going to thank the panelists and of course Pranab for an interesting discussion, and we will convene sharply at 1:15, that is to say 1915 in Europe, for the talk of Louis Putterman about Chinese lessons for the social market economy.
Okay.
See you soon.
Thank you. Louis Putterman. We now have Louis Putterman, Professor of Economics at Brown University. He's going to talk about lessons for democratic socialism from China's social market economy. Louis, the floor is yours.
Yes. Do you see my screen?
Yes.
Yes.
Okay. Thank you very much. So thanks a lot to John for organizing the conference and inviting me to try to come up with something to say. I'm not sure how relevant it is to all of the conversation today. I wanted to start before going into the topic just to echo something that came up during Pranab's talk, which is about the importance of defending democracy before worrying so much about social democracy. We are living in a country in the United States where it's very, very much in doubt. We don't seem to have an institution that guarantees that a party has to say government is elected by people in order to run for office or have candidates running for office. So we're really hanging by a thread in the United States. Well, China has called itself socialist and has exhibited some features that many had thought of as socialist and enjoyed a prolonged episode of high economic growth. The longest episode and the highest growth of the largest country ever in world history, which led to the escape from extreme poverty of anywhere from 100 million to 500 million people, depending how one counts. The highest growth period from about 1979 to 2013 included experimentation with many new hybrid institutions, including state-owned corporations having tradable shares, the exercise of control over the state shares by asset management companies that are partly removed from direct political control, somewhat resembling what Giacomo Corneo talked about this morning in terms of publicly owned stock shares of most of the largest corporations in China. I am beginning with the assumption that China does not meet our definition of socialist. That would be an economy that's organized by its people, run by them. But I assume that there are aspects of China's experience under Communist Party of China rule that may hold lessons for us. So an overview of the paper that I wrote, which is also a very imperfect paper, but I did my best to write a full paper for the conference. I welcome comments on it, and what I will say today is just a brief overview of some of the main points I was able to recall as I prepared for it. So I'm going to discuss, I discuss in the paper many dimensions of China's economic experience, even a brief discussion of the centrally planned economy period, and especially early post-reform experiments such as the township and village enterprises. So the points that I'm going to come down on as being most relevant for future democratic socialism, I think, are going to be success of hyper-Keynesian type demand management, which has been facilitated in China by an array of government control levers, especially China's control of its banking system. And China, in some ways, I think, personifies the actual implementation of a big push kind of idea in growth, but we can have big pushes not only of the rate of economic growth, but big pushes toward other goals, maybe environmental and other. And I also want to emphasize that the ability of global capitalists to adapt to the socialistic institutions of China when they were convinced that it couldn't defeat them gives very much the lie to the myth that private enterprise only works with laissez-faire. I think that there's so much evidence from China's experience that you can mix and match, and that capitalists will give up and allow new kinds of institutions when they're sufficiently convinced that there's no other way. Also, I'm going to talk about some possible takeaways from ownership forms that have been tried in China. So briefly, the next 7 slides go through some of the periodization of what's happened in China, and I'll spend only one talking about the period before the market-oriented reforms. So I just want to say that negative assessments that China had 0 economic growth 1949 to 78 are way overdone. Probably most of this audience knows that, but I often get students even from China who have taken to heart the message they're hearing from their liberal-minded economists that the period to 78 was completely lost or even negative growth. Actually, living standards were rising by at least 1% a year annually, and the GDP per capita was rising by 3 to 4% a year annually, although disproportionately heavy industrial output. There were huge accomplishments in terms of basic literacy and life expectancy. As to exactly what were the flaws of a centrally planned economy, I don't think we ever fully finished this discussion, although everybody assumes that we know what they were. I guess that we have too many more important issues to discuss to spend a lot of time on that, even in the economics profession, not during my 45 minutes. Nevertheless, you know, it's not totally settled. I personally like Alec Nove's interpretation more than Janusz Kornai, for example. I think this idea of soft budget constraint just makes almost no sense in a setting without markets, but no time to talk about that here. So China did basically adopt the Soviet Union's institutions, especially by 1957, after a period of gradual transition, and it did achieve rapid growth of heavy industry through, but unlike the Soviet Union or Russia in particular, it suppressed rural to urban migration. And this period up to 1978 was very important in setting the groundwork for the more rapid economic growth post-78, for example, through building basic physical infrastructures, broadening human capital, and also building up state capacity. Now, for the reform period, I break that up into 3 parts, and again, only the next few slides will be chronological in nature, but I'll talk a little bit about these 3 periods. From 1979 to 94 was a kind of reform without losers, marked by gradualism of transition. Then from 95 to 2005 is a period of much more accelerated reform, much more like that in the former Soviet Union and Eastern Europe with mass layoffs. Some people have called this the reform with losers period. And then since about 2006, definitely most emphatically since 2013, we see much less in the way of institutional reform and more of the tweaking of a kind of a stable hybrid of markets and private actors with very powerful state players, large-scale industrial enterprises, and the banking sector basically in state hands. So about the early reform period, this itself has various sub-periods. The initial reform, 79 to 83, focused on agriculture. Then the reform in urban industry begins in 84 and kind of ends by about 94, where state-owned enterprises are operating somewhat along the Hungarian model lines with mild change to be able to produce output for the market, not only for plan and purchase inputs on markets. Nevertheless, there was guaranteed employment and the state kept pumping money into these SOEs without major SOE failures. It's important to mention the shift toward export-led growth as a development strategy. The first SEZs started to open about 1980. Then there were more and more coastal open cities. And a lot of the success of China's reform period has been due to successfully following other East Asian export-led models. And also there was the opening from 1980 of rural to urban migration that had been suppressed. And that was a big mark of change and also led to the biggest rural to urban migration in world history. There was a period of slowdown of reform after the Tiananmen protests put the Communist Party on the spot. So about 89 to 91, more conservative leaders had the upper hand, but then there was the reinvigoration of the reform process after somebody put old Deng Xiaoping on an airplane, sent him to Shenzhen, made a couple of speeches, and they decided that reform was on again. I emphasize in an article I wrote for a book edited by Yingyi Chen and Janusz Kornai, that's quite a few years ago, that I think we could see China as having had a kind of a near encounter with market socialism in this early reform period, as market socialism was understood in the Western literature, in the form of these mildly reformed SOEs that are partly market oriented, using market priced inputs to purchase, to produce output that could be sold on markets. The institution of public land ownership, which remained basically up to the present day in the rural sector, the decollectivization through contracting the land out to the households, but not making land private property, that created a kind of a safety net for the rural population. And the township and village enterprises are especially important. I'm going to come back to them as indicators of a kind of a market socialist ethos that had some legs in the early reform period in China. Then we got this accelerated period where there was mass layoff of SOE workers, more than 50 million in a 7-year period. Most of the small and many of the medium-sized SOEs were shut down or incorporated into more successful companies or privatized. And there was the elimination of most of the local government controlled township and village enterprises in the countryside through what I think is basically an ideological shift of direction by the central leadership. There was a dialing back of most urban subsidies, including a push to privatize the urban housing stock, letting apartments be rented at market prices. There was a big state effort to harden budget constraints of SOEs and state banks, cleaning up the old backlog of non-performing loans. There was liberalization of rules for foreign investment and expanding the export promotion zones to most of the coast and many other urban areas. And finally, there were these preparations for, and then the beginning of entrance into WTO membership, which among other things led to the balance of trade, which had been sort of going back and forth between a trade surplus and trade deficit, to shift into an overdrive trade surplus and huge accumulation of foreign exchange holdings with big impact not only in China, but on the world economy. Then the period since about 2006 has seen a dialing back of the reform process, not of the reforms that had already been completed, but the leadership began to pay a lot more attention to inequalities, including between regions, try to bring up the Western or interior provinces, and try to address rural-urban inequality and the lack of social services to the rural-urban migrants. However, the government continues to be in control of the banking system, something that was a bit of a surprise because it had been thought that China was going to have to allow in much more foreign participation in the banks to get into the WTO. And the government strengthened the SOEs now under a corporate format, having tradable stock shares. And I'll say a little bit more about that in a few minutes. So there was also a massive industrial policy push to advance the technological upgrading of Chinese companies, kind of made in China initiatives, the sort of thing that Donald Trump used to love railing about. I mean, it was not all stealing American patents. There was actually research happening in Chinese institutions, and a lot of investment in the education of Chinese engineers and scientists. And this is shown by really big gains in the domestic content of China's exports. So China became a leading exporter of things like cell phones, computers, and eventually automobiles. after WTO admission, but wasn't producing most of the inputs to them, but gradually is producing more and more of the inputs, showing that it has the capacity to produce things like computer chips. And also, I want to emphasize the massive use of fiscal and especially of credit stimulus to offset first the 2008 global financial crisis, and then continuing that stimulus to push back against long-run slowing of China's economic growth. Whether this is well considered or not is not what I'm focusing on, but the fact that the government has had the wherewithal to push so much to kind of get things continued moving, building, create demand where it might not otherwise exist should be very interesting, I think, for a discussion like ours. Okay, so I now leave the chronological realm and lay out what I wanted to focus on mainly as themes of relevance to a discussion of the future of actual socialism as opposed to China's totalitarian socialism in scare quotes. So the market socialist elements had their heyday in the 1979 to 1994 sub-period. I'm going to talk about those a little bit more, including the township and village enterprises. Then I want to talk about the SOE corporatization and state control of the banking system, and also about that, what I called hyper-Keynesianism, the use of fiscal and credit levers as macro and industrial policy tools during the decelerating reform period. So I won't focus very much on the middle period of rapid, shock therapy type reform. And finally, I want to say a few more words about the world's accommodation of China. I think that there were many chances for the world system, including the World Bank and the IMF and many other players, to have prevented China from growing the way that it did if China didn't shift more toward the capitalist norm, and that China was allowed to proceed with some fairly superficial changes in many sectors is just another example that capitalists aren't very good at colluding as a class. My remarks about the institutions of the 79 to 94 period. First of all, the township and village enterprises have been discussed maybe a little bit ad nauseum. It's sort of like we always talked about Mondragon back in the day when we wanted worker cooperatives, and then there were the TVEs in China. But they were very real, and they created over 100 million jobs. And they really showed tremendous examples of entrepreneurship on the part of people whose official job was as a local official, not a private entrepreneur. They showed immense energy to develop jobs and new economic forms for the benefit of local people. That was quite interesting. And in many cases, I think those local public-owned enterprises might have even continued in the same format had the government not pushed from above that everything should be privately owned. The SOEs, Barry Naughton coins this phrase growing out of the plan, that you would continue to have your planned targets for production to deliver to the state at fixed prices, and you would get some inputs from the state at fixed prices, but you would gradually be producing more and more of your output for sale in markets using more and more input purchase in markets. Who were the players in the markets? Well, it was other SOEs. There was competition even among SOEs. I have a quote from a book by Kroeber in which he talks about the competitiveness of the SOEs with one another. And then there was the competition provided by the TVEs and the collectively owned enterprises, and a little bit by small private enterprises, and gradually partly foreign-owned enterprises. But I think the SOEs during that period are at least somewhat interesting, similar to the Yugoslav and Hungarian version of market socialism. And then finally, the agriculture itself, which was a very big success in the early Chinese reform period, was decollectivized from group production, but still collectively owned land. Households moved into much more diversified agricultural activity, but often the villages retained a role as cooperatives operating operating tractors, operating input distribution, fertilizer, and so forth. So China's ability to actually really complete its green revolution, that happened in the 1980s under reform with household farms, but with the institutional structure built by the commune system. So in the later period, we have the SOEs kind of reborn as corporations, along with the state-controlled banking system and the use of the fiscal and credit systems that I said I wanted to focus on. So first of all, the SOE corporatization. I think it's a very interesting use of an old idea that in the West was actually viewed negatively. I was really surprised when I heard Chinese economists start to talk about, oh, we want separation of ownership and control, because I used to teach the Western literature that started with Berlin Means, which said corporations are a bad thing because they separate the managers from those who are really the risk bearers, and separating ownership and control is dangerous. But China decided to use this model. And in some way, again, I'd say it's related to what Giacomo was talking about this morning, the idea of an arm's length relationship between public owners or pooled funds and the hands-on management of companies. And in fact, I cite in the paper something I wrote for perhaps a book of John and Pranab's many, many years ago about this idea of social ownership being fostered by sort of competing fund management companies that have to try to pick winners to invest the joint funds in. So this corporatization separates the state's role as a regulator and framer of industrial policy from its role as an owner. And they've created these things called SASAC, State Asset Supervision and Administration Companies, both at the national and at the provincial levels, to just act on the state's behalf as looking after the shares that they own, but not directly giving orders to the company managers. It probably hasn't been as legit as as complete as it's supposed to be. There are direct interventions, and through the party's control over who is in the state asset management company and the party's control of who the top managers of the big corporations are, there is still a lot of intervention. But in principle, the idea is interesting, and it's adhered to some degree. Then with regard to banks, there were 4 major banks carved out of the largest bank existing at the time of reform, and these got cleaned up and their books put in order to the point where they could put about 25% of ownership stake in each of the banks on sale in the international market, and very large, including one of the largest US banks, became partners of these banks, but minority partners. I think that's a sign that they really did have a high profitability, that the profit shown on their books is real, and that there was adequate transparency. And some very large development-oriented banks called policy banks were created in China that could fund projects such as the Three Gorges Dam project, and are now funding the roads and what is it called? Roads and I think I have the word later on in the presentation. Apologies. Yeah, China's big investments in infrastructure in Kazakhstan and around the world. So let's see how I'm doing on time. I want to point out that in this latest period, especially since 2008, the government's control over the banks has been a big plus, not only favoring government lending to the large SOE-owned corporations, which I point out in the paper are the lion's share of the very large corporations in China, the ones that make the Fortune 500, Global 500 list. But this state control of banking has allowed the rollout of, here's the word I was looking for before, Belt and Road, there we go. It has allowed the rollout of these credit programs where the government basically said to municipalities and other local government entities, you can create new projects to build industrial parks, build apartment developments, build new airports, et cetera, and you just establish some sort of nominal entity that promotes that project, and will get the banks to lend you the money. And that was a way that most of the money pumped into the economy in 2008 and 9 to fight against the global financial crisis came in, not as traditional fiscal stimulus, but much of that has continued, even though there's a lot of international criticism that there's a new wave of bad debt on the books. There's been enough growth to accommodate that. And again, this relates to the whole idea of the international banks not pulling the plug on China. There's just no agreement to do that. Leaving China out of the equation of world economic growth is just too costly to everyone. And so actually China, with all the bad debt, they will probably muddle their way through with and pay for it again with growth. Yeah, so I think I've already talked a bit about the use of these fiscal and credit tools and also industrial policy. So perhaps I kind of got to this big push idea early in the talk. When we teach development, we talk about the possibility of multiple equilibria, where the absence of well-paid workforce means an absence of demand, and no company can move first to make big investments because they just don't know who would buy their products. And that whole equilibrium problem could potentially be cut through by some large-scale actor that makes a big push and orchestrates the investments simultaneously. Of course, the traditional Soviet model was all about that, but leaving markets out of the equation entirely. And that's what China did from 57 to 79. But it could also be done, I think the reform era experience has shown, with markets in the equation. Lots of markets, lots of private actors, but a very strong state actor controlling a lot of the purse strings, being able to have this fiscal expenditure, having some of the largest corporations, et cetera, can be a big coordinator of the economy. So let me see what I have left here. Okay, I'm actually not sure how close I am to my endpoint. Hold on one second, folks. Apologies. Okay. Oh, there we go. Okay, yes, very close. So I've talked quite a bit already about the accommodating response of world markets to a sort of non-systemic, non-conformist China. I think China adds to evidence from the workings of welfare states and social democracies and the way environmental regulations have worked in the West. And we've had so much more evidence just the last years with COVID-19 responses that the idea that we have a fully market economy is really a joke. So many large companies have been bailed out by the government. But if we needed any more evidence that markets can still function quite well, in fact, need rescue often by state institutions, I think the evidence from China is very useful. So profit-oriented entities operating mostly in markets like international banks respond quite successfully to politically originated interventions, and the idea that they would only work under laissez-faire is an ideological myth. And the world's pro-capitalist governments, banks, multilateral agencies really facilitated China's rise despite its unwillingness to converge to their system. So this shows this lack of a pushback and suggestive of room for other radical experiments. Of course, the devil is in the political details. If you can still control the political system, as the right has shown ability to do in the United States, then social democratic experiments are unlikely to get very far. So institutional political change is is absolutely critical for that reason. So I have quick words about China's glaring negatives. First of all, there were dramatic increases in inequality of both income and wealth during the reform period. China went from being one of the most equal countries to one of the least equal countries, similar to Brazil or Central American countries that we used to trot out as examples of inequality. Not all the inequality is due to rural-urban differences or to coast-interior differences. Some of it's due to normal working of markets. People have different levels of skills, different degree of entrepreneurship, different luck of timing. But a lot of the inequality is exacerbated by monopoly linkages between government and people in business. Finally, the lack of transition path toward democracy, some of the willingness to accommodate China's transition seemed to be premised on the idea that with enough change in the economy, change in the polity would come, but certainly there's been no real evidence for that yet. In fact, China's been just an amazing example of a dictatorship able to buy quiet from the vast majority of its people by ginning up growth. And then I end with the question of, could China itself ever become a social democracy? And I make the point that I think that China has as much antipathy towards socialism as any of the other ex-communist countries had, sort of pent up in the population. So it's really unlikely that any post-communist politicians would pose as socialists in order to be popular under the current climate. And also the recent decades have given rise to a class of plutocrats who are the most likely to be able to hijack any kind of democratic transition that begins in China. So in a way, I do believe that the Communist Party under Xi Jinping and his predecessors have actually created the grounds for a much more inegalitarian China in the future, and a less successful democratic China. China ever turns that corner. And I think that the appeal of social democratic type ideas in the future is likely to be driven more by positive experiences of other countries like Scandinavian countries, West European countries. Perhaps by the time China becomes democratic, there will be enough experience even in the US to learn from, and countries like Australia, South Korea, Taiwan. There may still be a few positive impressions left over from some of the bright spots of China's experience, like the equality of land ownership that was fostered by the party, and like the success of the TVEs. But overall, I'm afraid that the experience has not made China the most fertile ground for social democracy in the future.
Oh, great. Thank you, Louis. So now the time is for questions. So let me see. Is there no questions yet? So maybe while people are formulating their questions, Louis, may I ask you some questions?
Yes, I saw one hand from Max though, but please go ahead.
Look, where is it? Let me, I don't see.
It's a digital hand.
Yes.
You have to use the gallery view.
Oh, go ahead. Go ahead, please.
Great, thank you. So Louis, thank you for the fascinating paper and for the presentation. I was wondering if you could maybe expand on one particular challenge and whether we could learn something from the Chinese experience on that. So I'm wondering, you could think about the Chinese experience as a combination of catching up and then reorienting the economy, right? And this industrial policy reorientation made in China strategy is probably more recent, and so we have less of a track record to learn something. But I was wondering if you could say something about the extent to which industrial policy worked in China and whether this could be a learning experience for the Western economies, social democratic or otherwise, as we try to reorient our economies towards a more sustainable model. Yeah, if there are industrial policy lessons to be learned.
So I guess that you're talking mostly about the recent industrial policies of reorienting away from export-led growth to more domestic demand-driven and so forth.
I suppose, sorry.
I mean, my impression is that on the whole, industrial policy has been fairly successful in China. I'm a little bit confused by the use of terms, because we used to talk about the Japanese model as industrial policy, as sort of climbing that ladder from labor intensive to more capital intensive and technologically sophisticated exports, was itself an industrial policy, and China followed Japan in that line. But if you're talking about the transition toward more domestic self-sufficiency after the export phase, it seems to have been working fairly well. Yeah.
And any other question? Otherwise, I will have some questions.
I see Giacomo's hand.
Go ahead.
Yeah, thank you very much. I agree that there are some lessons to be derived also for nowadays market socialism or the Chinese experience. And you put forward, for instance, the role of corporatization for state-owned enterprises and the role of, say, a kind of a sovereign wealth fund of this, a bit of the Singaporean fashion. But don't you think that the Chinese economy of the last 20 years is more resembling the Nazi economy, in the sense that both hyper-Keynesianism and then the role of the authoritarian state leadership and its intertwining with the industrial elite, the possibility and also the willingness to have long-run plans that are not hindered by democracy, and hence the overcoming of the commitment problem of politicians, all immersed in an extreme amount of nationalism. So to me, it seems that this is also something that you mentioned at the beginning. Indeed, market socialism without democracy is a technocracy that if you happen to have leaders that are more intelligent than the Nazi leaders, then you can achieve astonishing economic results, but that is extremely far from the ideals that we usually associate with, say, humanistic socialism, the ideas of personal autonomy, democratic participation. So what is your position on this?
Basically, I really couldn't agree more. I meant to add that in the last slide. So I mean, I was trying to emphasize that I don't think China is socialist in the sense of being really under the control of its people and very far from democratic. But on the other hand, yeah, its dictators have been extremely clever. They're really good at choosing competent people to keep joining the dictatorial hierarchy, except they may have slipped up a bit with Xi because he seems to want to create a big cult of personality. But in any case, I mean, Chinese have been very lucky with the dictators that they got for the large majority of people, not minority groups, not religious people, but for the large majority of people, these are clever dictators who want to spread some of the wealth around to placate everybody. Yeah, it's hard to decide. I am working on other projects that actually have to do with whether there could be a future of democracy in China from the standpoint of how views of political rights are changing over time within China, partly by studying people coming out of China very recently and look at differences between views in Hong Kong, Taiwan, and China. So yeah, I basically agree with your political assessment. I don't at all want to excuse the CCP for anything.
Okay, the next commentator is Ellen.
Yes, I guess it's just a question about the premise of asking ourselves whether China is going to go towards more democracy or more democratic socialism. When we look at the state of our current democracies, right, they are backsliding. We have 100 scholars who've signed this alarmist op-ed about how, you know, we're about to lose American democracy, and of course we too have plutocrats. We don't have that much responsiveness to majorities. So what's so attractive about our model? Why do we assume that that's what the future that China should aspire to? And shouldn't we reverse the question? And isn't there something about the Chinese model that I don't know, it's provocation that we should find attractive instead?
Well, this is probably a question for another forum and for people wiser about politics and ideology than I am, but I certainly think about it as much as anybody else. And I mean, I think we have to hope that there is wisdom in ordinary people under good circumstances, and that if we could, you know, it seemed, for example, that in the recent election in the United States, getting more people to come to the polls was actually a good thing. And so I think that one of the most important institutions the United States is missing is an actual institution that safeguards democracy. You should not have allowed a person to run for office who didn't commit to accepting the result of the election. There should be an institution like a Supreme Court or a council or something that would say, okay, well, that person's name has to go off the ballot because they don't accept the system. The same party standing that's not willing to commit itself to an electoral system. So the US is tottering on the brink of losing what proximity to democracy it had. As to whether democracy would really be better than an enlightened dictatorship, who knows? The problem is, how do you assure that the dictatorship stays enlightened? I think that we believe in democracy because we believe that on balance, it's better to have mechanisms for holding the leaders accountable.
Okay. May I take this opportunity to ask my question? A couple of questions, Louis. One is, you didn't, in your paper, you haven't, or nor in your talk, you didn't touch on the issue of innovation. This is the area in which I find there's a lot of difference of opinion. So, for example, if you read the book by Asimoglu and Robinson, and Why Nations Fail, they openly say in that book, they may have changed their mind since then, is they say that ultimately catching up is okay, but after that, after you reach the production frontier, innovations require some kind of democracy, creative freedom, etc. Whereas others think that no, China is doing well in innovations, in particular in some areas. There, I think it varies between different types of innovations. And I've already, in my talk, I talked about difference between disruptive innovation and incremental innovation. And I don't see any reason why China could not have incremental innovations. But anyway, I'd like your opinion on the subject of innovation. I have one more question. I'll come to that later.
Yeah, thank you. I don't claim to be a real expert about innovation of technology in China. And I think there are questions that are also related to cultural styles of learning and so forth that maybe have been problematic for other East Asian countries. But my impression is that, you know, we definitely can't count China out on many of the relevant innovation races. And one of the places where I did weigh in on innovation in the paper is to argue that one of the chief failings of the centrally planned economy was that it performed abysmally with regard to most innovation. Although even there, when they concentrated resources on something such as developing hybrid forms of cereal crops or some of the military things, they didn't do that badly. So it's one can't make a a blanket black and white statement that you need independence or the profit motive, independence of companies and profit motive to get innovation. But the comment that I made in the paper is only that for all of us who are discussing socialist models, I think we should keep in mind that you can't necessarily keep the people satisfied with the soft improvements associated with these ideals of socialism that we like. If there's somebody else with a system that's producing a better iPhone or better gadgets and toys and things, it's very possible that people are going to be hankering after that, no matter what improvements you've made in terms of quality of working life or rights in the workplace and so forth. So I think we have to build technological capability into the ideal economies that we're talking about. And that, of course, gets super complicated because technology is also very dangerous. Now, how do we regulate the future technological changes? The people who are going to be having this discussion 200 years from now might not even look like us because they'll be so bionic.
But one follow-up issue on that, people say, those who think that China will not be innovative, is that many of these farms that you've talked about are too big to fail. So the Schumpeterian exit or creative production is difficult to do in China. So that kind of limits, you referred to the competition that Kroeber and others have talked about, but it's not dynamic competition because the farms are too big to fail. So do you have any
and I mean, just to be clear, I teach about China's economy using the textbook by Barry Naughton, China's Economic Development, and he talks a lot about the idea of China being in a middle income trap. And I do find that very plausible. It is entirely possible that China is going to get to kind of relatively high income, but high middle income, but still not be able to escape from that because of partly because of these institutional defects. So I'm not saying that China's system is every bit as nimble as Switzerland or Denmark.
Yeah. Okay, there I see some in the comments. There is something about there's a question. Thank you very much for the presentation. Could you touch on the difficulties of global adaptations of the Chinese economic development? How many Western countries overcome ideological opposition or biases and the fundamental differences between Western and Chinese political institutions?
Could you read the last
okay, the last part?
20, 30 words, yes, please. I'm sorry.
Fundamental difference between Western and Chinese political institutions.
I'm not really sure what to make of that other than the democracy versus dictatorship part. I thought it might be going a bit in terms of China's disruption of the global system. My personal opinion is when I teach about the Chinese economy, I remember how back in the 70s and early 80s, we development economists, perhaps including people like yourself, Pranab, we would always say, well, China can't really follow the South Korea or Taiwan in that export-oriented model because the West wouldn't be open to that many imports from such a gigantic country. Right. The West accepted all the imports. And what was the result? After 40 years of declining industry and job loss and so forth, presided over by both Republicans and Democrats, somebody like Donald Trump can come along and tell the workers that they've been sold out to China. So this was like very dangerous stuff. And I think the West didn't manage it all that well either. We should definitely applaud that hundreds of millions of people came out of dire poverty in China by being able to engage in a global economy. But our economies didn't do what they needed to provide the new skills and so forth to the people who are losing their jobs. So it's kind of collusion between our Wall Street and their, Communist Party.
Right. In fact, it's because the Wall Street is divided. So in some sense, somebody is lured by the size of the China market, will do,
always.
and
Right.
will undercut the collusion that you're talking about.
Right. If you could just sell one umbrella to every Chinese, you'd have a great business plan.
Exactly. Any other comments? Because we are almost out of time. I see the last, can we say that an authoritarian government does well in face of neoliberal financial capitalism, while a democratic government is hollowed out by it? That's a question to you.
Yeah. Perhaps we can. I mean, that's, yeah, entering into the whole question of the capabilities of democracy to really respond in the crisp and timely fashion that's needed, whereas a dictatorship can do that pretty easily. You know, our system shows its worst side when we're in these periods where we have so much political division, and the goal of one side becomes make sure the other side can't do anything. So of course that makes dictatorship look tremendously attractive. Yeah, so I think the lesson of that is, well, maybe it's a gift to the West that China has proven how well dictatorship can work in some ways, and we have that much more pressure on us to really make democracy work and to safeguard democracy. And I don't know that democracy is going to have a chance in the future in a place like China if we don't prove that it works elsewhere.
But also, I would say, I would add to that is that dictatorship have the problem of correcting mistakes. If they make mistakes, then those can be very serious, and it will take a long time to correct them.
Right.
Anyway, I see a hand from Praswa, and that probably has to be the last one.
Yeah, thank you. I was wondering about the following topic, which you did not mention in your talk, which is corruption. And assuming the corruption is, I mean, preventing growth, do you think that there is a special, you know, I mean, do you think that democracy could be a better shield against corruption than the Chinese political institutions?
My immediate reaction to that is that I'm not really sure whether democracy is what's key versus norms. Norms and expectations about corruption. And my impression is that corruption is not as much greater as we might think it would be in China than in some Western countries like the United States. I think it is greater, but it's not by orders of magnitude. And this is in part because there is a normative environment in China which is somewhat anti-corruption. Yeah, so I put myself more in the camp of people who talk about social capital and civic norms and that sort of thing. And I think interestingly, China is actually not that different from the West in terms of the strength of pro-social norms. And this may have kept a lid on some of the corruption. But I don't want to downplay that there has been corruption in China.
I see John's hand. John.
Thank you. Joe Stiglitz used to say, this was about 20 years ago, when people talked about Chinese corruption. Well, look at the Chinese corrupt actors steal millions, but the Russians steal billions. I don't know if that's still true, but it does seem to be some evidence for that, in the sense that the Chinese corruption has not done an awful lot to stop the raising of 500 million people out of poverty, or produce the very high rate of growth that they've had.
Right. I work in experimental economics mostly these days, and we do things like trust games and public goods games and things where we measure people's norms and their willingness to trust each other, trustworthiness, their willingness to steal when we give opportunities. And it's really interesting that in subject pools in China, we see behavior rather similar to that in Western European countries that we think of as having good social norms, and we see worse behavior in Russia and in Belarus and in some other countries. If anybody wants, I could give like a tour of comparative corruption, comparative inclination to steal and lie and cheat according to experimental economics. And China actually performs relatively well, and I'm not personally surprised based on the friends that I have from that country. That's all I could say right now.
I see the hand of Joachim. Please.
Yes, just when you talk about corruption, I cannot separate it from transparency. Both the cases of China and Russia are the cases of societies where the center controls the information very effectively. And can you comment on that, Luis?
Only I agree that that's a good point, and that does make it very hard to assess, reliably the exact extent of corruption. So certainly there could be some quite big corruption that's hidden because both the party and the government and the businessmen involved are able to shield the information quite completely. So I don't claim to have a good quantitative assessment of the degree of corruption. I'm just kind of echoing what one tends to hear.
In line of that, I could also say that many Chinese economists say the Chinese capitalism is crony capitalism.
Yeah.
Crony capitalism is another form of high corruption capitalism.
Yeah, absolutely. But we have some degree of crony capitalism in the United States too, but it's certainly much bigger in China.
Right. Okay. I don't see any other hand. John, do you want to take over from there? Thank you, Louis.
Thank you.
Yes, thank you for a very stimulating discussion. And we will meet again tomorrow morning at 10 a.m. New York time for Marc Fleurbaey, talking about the stakeholder corporation and social welfare. If anybody wants to stick around for another 10 minutes, I'm happy to stick around and just chat. So I won't hang up. I'm sorry I can't invite you all out to dinner at a nice restaurant in New Haven tonight.